of the Labor and Commerce Committee. A quorum is present, so the Committee on Labor and Commerce will be called to order officially. We have a few administrative announcements. We have some buy for the day. House Bill 835, buy for the day. Is there a motion?
So moved.
Second. All in favor?
Aye.
Thank you. Another buy for the day, House Bill 1240. Is there a motion?
So moved.
Second. All in favor? Any opposed? House Bill 1289, buy for the day.
So moved.
Second. All in favor? Any opposed? Buy for the day, House Bill 1441, buy for the day. Second. All in favor? Any opposed? All right, down to House Bill 1457, buy for the day. Second. All in favor? Any opposed? Thank you. Now, we have one bill that we have been asked to strike from the docket. The patron requested House Bill 335 be stricken from the docket. Is there a motion and a second?
So moved. Second.
All right. Members will cast their vote on the electronic voting machine. Clerk, will you open the roll? Clerk will close the roll. Motion passes 19-0. We also have an administrative referral to another committee. And the Speaker has asked that House Bill 1067 be referred to general laws. Thank you. All in favor? Any opposed? It's referred to the Committee on General Laws. Thank you. And now we will start our docket, and we will hear from Subcommittee 1.
Thank you, Madam
Delegate
Chair.
Bagby.
Thank you, Madam Chair. House Bill 45 prohibits an employer or other persons from discharging an employee if the discharge is motivated to an extent by knowledge or belief that the employee has filed a claim or taken or intends to take certain other actions under the Virginia Workers' Compensation Act. Currently, retaliatory discharges are prohibited only if the employer or other persons discharge an employee solely because the employee has taken or intended to take such actions. It was the will of the subcommittee to recommend reporting this bill 5-3, and I so move.
Okay. It's been properly moved and seconded that House Bill, was that 45?
Yes, ma'am.
Be
Yes,
reported.
Madam Chair,
Yes.
I have a substitute motion.
I have Delegate Marshall up first, and then
Yeah, so a question of the patron, Madam Chair.
you may proceed.
Thank you, Madam Chair. So, sir, on line 14, let me get my glasses. Such a discharge is motivated to the extent by knowledge or belief. How do you prove that?
Madam Chair, Delegate Marshall, I would say to the delegate that the belief standard would be proved by the same way that the knowledge standard would be proved. So that would be based on likely statements from the employer, things along the line of I bet he's going to file a claim. I better get rid of him now. Something like that.
Follow-up question?
Yes, you may proceed, Delegate.
So, Delegate Carter, so anything other than your example then would not fall under your Bill 45?
Madam Chair, I would say to Delegate Marshall, I'm sure there are other examples, other ways that it could be proven that the employer had knowledge or belief of the intention of the claimant. However, I'm not an attorney, and so I wouldn't be able to give a comprehensive list of examples.
Thank you, Dr. Thank you, Madam Chair.
Delegate Wilt.
Thank you, Madam Chair. I have a substitute motion.
You may proceed.
I move that we pass the bill by indefinitely.
Okay, that's a recorded vote. There's 2 minutes per side. Delegate Wilt.
Thank you, Madam Chair. I'm just asking the body to slow down just a bit and take a deep look at what this legislation actually does. And as Delegate Marshall pointed out, I mean, just the very terminology of it is so subjective. The fact that it's motivated to any extent by knowledge or belief, that knowledge, it could be belief in the knowledge. I mean, there's absolutely no way to prove this. Madam Chair, I mean, this is just ripe for a lawsuit, and so it's terrible policy, and I ask that we pass the bill by.
Okay, 2 minutes on the other side.
They must agree.
Okay. None. It's been, there's been a motion to pass the bill, and it's been seconded. Are you ready to record your votes on the electronic voting machine to pass the bill? To pass the bill by? Clerk will close the roll. Vote is. Motion fails. The motion
Thank you, Madam
passed.
Chair.
Now, okay. Now we'll go back, I'm sorry. We'll go back to the original motion.
I thought it was
Okay.
okay. I saw it.
So we're back to the original motion to pass the bill. Because we voted not to pass it by.
Madam Chairman,
Who is that?
is
I
Delegate Head?
I see Delegate Ayala. And don't forget to use your request to speak button.
Okay, I did. Delegate, I'm looking at the bill, and I'm sitting here, and I want to speak to the motion to pass the bill, but just for context, I just see very minor edits to the existing code. Could you tell me how this changes the scope of?
Madam Chairman, parliamentary inquiry. Have we not voted on the motion to pass by? So
Yes.
any commentary about that motion would be out of order? But she said motion to pass by.
Madam Chair,
Yes.
I yield.
Yeah.
It'll be a long afternoon.
You said pass by. Okay, then speak to the motion.
Okay. Delegate Head.
Yeah, thank you, Madam Chair. If I could ask the patron a question about the bill. Let me give you a scenario that gives me a little pause here. Because the way this is worded, it doesn't say that it has to be a founded claim. It could be an unfounded claim that someone has. So if an employer has an employee that doesn't follow policy, that puts themselves into a problematic situation, that then causes them to have an injury while they are working, but it would not be a covered injury because they violated policy. And they've signed the policy. They know all this. They know that they violated policy. And because we now know that they have violated policy, and then the employer says, I expect they're also going to go try to file a workers' comp claim as well, which will tangle things up and raise costs to the business and cause problems on down the line. That, to my mind, would be a valid reason to terminate the employee because they're violating policy and also want to exacerbate that by filing a claim on workers' comp claim, and tangle things up. And based on the way this bill is worded, that would mean that the employer would be liable and could be sued. I mean, how is that possibly a good idea for business and for any employees that do follow the rules? I mean, how's that possibly a good plan?
Madam Chair, I would say to Delegate Head that this is dealing with discharge of an employee for exercising their rights. If the employer is terminating an employee for filing a fraudulent claim, I believe that's your hold up on this, that would remain unchanged from current law.
Madam Chairman, if I will, not according to the verbiage of this bill. Because if part of it is filing a claim, whether it is and it's not fraudulent, it's founded or unfounded, and that's what happens in workers' comp situations. So if it's an unfounded claim and they would be denied, it doesn't matter. That you can't use the fact that they are violating the rules and they were planning to file, because where I see this going is they're going to go file a workers' comp claim. The employer knows that, and they go ahead and they terminate them because they've been violating policy and they were going to start tangling up things. So that probably would enter in because they knew. But if it entered in at all, according to this, and the way this bill is worded, then they're liable and they can be sued. And we've said that that's okay. How is that okay?
Madam Chair, I would say to Delegate Head that firing someone for exercising their rights is generally frowned upon by the code. Now, to the delegates, a specific concern as to whether or not the employee would be able to be fired for, say, a safety violation. I believe that's the sort of thing that the delegate is getting at. That, again, would remain unchanged, Madam Chair. This would merely change that they would not be able to use whether or not the person intends to file a workers' compensation claim as a basis for their decision. But their decision as to whether or not to terminate somebody for failure to follow safety procedures would remain unchanged.
Delegate Kilgore.
I think the bill sucks, but.
Madam Chairwoman, I would say to the members of the committee that it looks like if you read this, if you read this, the current language, workers are already protected from solely being fired for workers' compensation or filing a workers' compensation claim. So I would say this is an unnecessary piece of legislation. A worker already has that right of action. If they can prove that was the cause for their termination, then they can go ahead and sue. And I think this is very unnecessary. Okay. So thank you.
Thank you. It's been properly moved and seconded. Ready to vote? Clerk will close the roll. The bill fails to report 10 to 10.
Thank you, Madam Chair.
Thank you. You can complete your report, Delegate Bagby.
Thank you, Madam Chair. House Bill 169 is a bill that adds correctional officers to the list of public safety employees who are entitled to a presumption that certain infectious diseases are compensable occupational diseases. The subcommittee recommends reporting and referring to the Committee on Appropriations on an 8-0 vote, and I so move.
Is there a motion on this bill?
I so move, Madam Chair.
Okay. Ready to vote? You can register your vote on the electronic voting machine. The clerk may close the roll. That measure passes 20-0.
Madam Chair, House Bill 617 provides that a physical injury, including the conditions of carpal tunnel syndrome that results from repetitive motion, shall be treated as an injury by accident for purposes of the Virginia Workers' Compensation Act. This bill also removes a provision that declares carpal tunnel syndrome to be an ordinary disease of life. The subcommittee recommends reporting and referring this bill as well to appropriations on a 5-3 vote, and I so move.
Is there a second? Ready to, just a moment. Delegate Wilt.
Thank you, Madam Speaker. Speaking to the bill.
You may proceed.
Madam Speaker, this is another bill that I just urge the body to again take a step back and give it another consideration here before we move it forward. And Madam Speaker, just life is repetitive, and to single out. I know there are some allowances that we look at from a federal level in the description, but to me, Madam Chairman, this is so broad in what it's trying to do here, and there's just a lot of potential for some very unintended consequences. So with that, I'd ask the committee to not move the bill forward.
Okay. Delegate Ransom.
Madam Chair, I see that there's a fiscal impact with House Bill 617.
Yes. If it is to be referred to appropriations, should we act favorably on this piece of legislation?
Madam Chair, that was the motion.
Yes. It's been properly moved and seconded. All ready to vote? And register your vote on the electronic voting machine. Just a moment. The clerk may close the roll. Measure passes 11-9. And, I'm sorry, report and refer to appropriations.
Incorporate first. Yeah, we can. When we get to that bill. Yeah.
Madam Chair, I want to make a motion to incorporate House Bill 41, House Bill 121, House Bill 733, and House Bill 1536 into House Bill 783. Motion to incorporate, Madam Chair.
Okay, just one correction. Is it 44 instead of 41?
44, 121, 733, and 1536.
All right. We're all together now. That's a voice vote. All in favor? Any opposed? The motion carries.
House Bill 783 adds cancer of the colon, brain, or testes to the list of cancers that are presumed to be an occupational disease covered by the Virginia Workers' Compensation Act when firefighters or certain employees develop the cancer. The measure removes the compensability requirement that the employee who develops cancer had contact with a toxic substance encountered in the line of duty. The subcommittee recommends reporting a substitute and referring to appropriation on an 8-0 vote, and I so move.
It's been properly moved and seconded. Any discussion? Ready to vote that this bill is passed, the substitute is passed, and what was it? And we need to adopt the substitute first. Is there a motion? We did had that motion. Second.
Move to
All in favor? Any opposed? Motion carries. All set, we're ready to vote on this measure. The electronic voting machine is now open. The clerk may close the roll. The measure passes 21 to 0. Thank you.
Madam Chair, House Bill 1542 establishes a presumption that hypertension or heart disease causing the death or disability of a full-time sworn member of Enforcement Division of the Department of Motor Vehicles is an occupational disease compensable under the Workers' Compensation Act. Move to substitute. Oh, excuse me. I'm sorry. There's no substitute on the board. Subcommittee recommends reporting and referring to Committee on Appropriations on a 7-1 vote, and I so move.
Properly moved and seconded. Any discussion? Ready to vote? We're going to vote on this House Bill 1542 and refer it to appropriations. Clerk will open the rolls. You're fine. The clerk may close the roll. The measure passes 18 to 3. It will be referred to appropriations, but the measure passes.
Madam Chair, House Bill 1558 authorizes the Virginia Workers' Compensation Commission to create an ombudsman program and appoint an ombudsman to administer such program. The program's purpose will be to provide neutral educational information and assistance to persons who are not represented by an attorney, including those persons who have claims pending or docketed before the Commission. The subcommittee recommends reporting and referring to the Committee on Appropriations on an 8-0 vote, and I so move.
Is there a second? Is there any discussion? All right. Ready to cast your vote on the electronic voting machine? The clerk may close the roll. Measure passes 21 to 0.
Thank you, Madam Chair. That completes my report.
Thank you so much, Delegate. Good job. Thank you. Now we're ready to move on in Block 2. First is House Bill. Let me mention one thing quickly to everyone that I forgot to mention from the onset. After this meeting, there are only 3 more regularly scheduled meetings left to process all of our committee bills: January the 28th, January the 30th, and February the 4th. So every time I grant permission to go by for the day, that's fine, but you got to remember also that it's not sure that your bill will be heard in one of those 3 remaining meetings. So as you make a request to pass by, I want you just to acknowledge that your bill might be left in committee. And now we shall proceed on that happy note. All right, House Bill 69, Delegate Carter.
Thank you, Madam Chair. I would request that this bill be continued to next year. There was a second fiscal impact statement that was put on this after the deadline, so there is no corresponding budget amendment.
Second? All in favor? Any opposed?
Thank you, Madam Chair.
Yes. All right. Okay. Next, House Bill 155, Delegate Sickles. Is he here? Okay, we've got people coming and going today. So let's go to House. Okay, we've done this. Delegate Davis, House Bill 354. Okay. Okay. House Bill 438, Delegate Heretic. I'm sorry, 439. I gotta get mine out.
Thank you, Madam Chair, members of the committee. HB 439 may sound familiar to most of you. I've offered this bill several times over the past several years as a means of losing some of the call center jobs that Virginia's most challenged fiscal communities need most of all. To remind the committee, in 2018, we lost over 300 call center jobs in Danville. In December of 2017, we lost over 100 in Emporia. In 2016, we lost over 500 in Tysons. In January of 2016, we lost almost 350 in Hampton. In 15, we lost over almost 150 in Bristol. And in 14, we lost over 100 in Roanoke. This bill has two essential components, Madam Chair. The first is that private call centers operating in the Commonwealth of Virginia would be required under this legislation to offer notice to the Commonwealth of its intent to relocate call centers elsewhere. And there's nothing in this legislation that stops them from doing it. But what this does do is it would make those call centers, the companies that operate those call centers, ineligible for fiscal support, grants, that sort of thing, tax incentives for a period of 5 years. In other words, we're not going to incent their removal of jobs from Virginia. The second aspect of this call center bill, Madam Chair, I think is one that passed out of the House last year. And that would be to require, within a reasonable time, the Commonwealth of Virginia, our state agencies, to utilize call centers primarily within the Commonwealth of Virginia for providing services to our constituents. I would say respectfully that, charity begins at home. And when our citizens call the Commonwealth of Virginia to ask about retirement benefits or whatever, it seems to me that they should be picking up the phone talking to fellow citizens and not someone from other parts of the state or other parts of the world. As I indicated previously, that aspect of the bill passed out of the House last year. It did die in the Senate, but I'm hoping it might have somewhat better prospects this year. Madam Chair, I do have a number of speakers on behalf of the bill.
Is there any member of the committee would like to have a question for the patron? Okay. Any member of the public like to speak in support of the bill?
Hello, Madam Chair and members of the committee. Thank you for allowing me to address you today. My name is Char Lewis, and I'm a call center worker here in Virginia. I'm speaking to support House Bill 439 to help protect my job and other call center jobs in Virginia. Call centers are an important economic lifeline for our communities in our state and across the country. With approximately 108,000 call center workers employed in the industry in our state alone. Thousands of call center workers across the state in the country have lost their jobs in recent years as major corporations have offshored customer service operations overseas. The call center I work for used to be fully staffed with every seat filled. Now it is less than half a quarter of the workers there. I've seen 2 locations close since I've been employed, in Virginia Beach and also in Fairfax. It would be one thing if there was no longer a need for those employees. However, everything is just being sent over to overseas contractors in the Philippines, India, and Mexico. I know that because I'm constantly fixing their errors that they create every single day. Right now, if a center closes, it is often advised through a WARN notice and assistance for the workers displaced, which is not tracked in the incremental loss of one job at a time. It is too easy to flip a switch and send these jobs overseas. We must have protection. A similar bill has already passed in Nevada, Colorado, Maine, Louisiana, and Alabama. If Alabama can protect its workers, then Virginia can too. I thank the bill sponsors for their leadership in introducing and sponsoring this bill. This is important legislation, and I urge all the legislators to support the effort. Thank you.
Good afternoon, Madam Chairperson. My name is Yvonne Potts, and I do support this bill. I've been working in the call center for 24 years. I've seen a quarter of our work and our customers go to offshore accounts, and we also have seen just our employees not been able to work and the seats been gone. So I am in support of the bill. We like to keep good working jobs here in Virginia.
Madam Chair and members of the committee. I've never got to say that before, so please indulge me. No, but Madam Chair and members of the committee, the Virginia AFL-CIO stands in support of this. We think it's a good measure in order to protect jobs, and it just makes sense, especially like with our tax dollars being used as well. So again, we would just ask that you support the bill. Thank you.
Is there anyone who would like to speak against the bill? Seeing none? I was trying to keep hope alive.
Madam Chair, and it's my first time to be able to say that also. I'm Rick Cornwell with Verizon. We think it is laudable, the effort that Delegate Heretic is carrying to try to retain jobs in Virginia. This bill, though, has a lot of unintended consequences in the way it goes about doing that. If you read this bill, you will find that any company who has 50 employees who receives calls, customer service, it doesn't mean outbound calls, it means incoming calls also. It would capture those. And if I move those down I-81, any one of those, if I have 50 employees in the state and move some of that traffic into North Carolina, for instance, for consolidation purposes, I would be in violation. So you might say, well, okay, you're in violation. What if the bill also says that any incentives that you may have gotten from the state, of which, by the way, full disclosure, Verizon does not accept state incentives. That's not what this is about. But if you are a company who does that and have used either tobacco commission money or money for broadband purposes, which we're all trying to get done these days, you would have to refund that money. And so I think while the concept, keeping jobs in Virginia, we're all about that. As a matter of fact, we think this bill will do a lot to chill companies who have call centers from wanting to locate in Virginia. So we ask that you oppose this bill. We were okay with last year's compromise that we ended up with in the House, and we hope that you'll reconsider that again. Thank you.
Mr. Chairman, I'm Doug Gray on behalf of the Virginia Association of Health Plans. Madam Chairman, we have contracts with the state to do Medicaid business as well as the state health plan. Some of the contractors have their centers centralized in a location outside of the state for efficiency purposes. And so I think when we renew or they rebid, we would have to switch the centers here at that point. And I think that's the concern that we wanted to share. Thanks.
Madam Chair, Eric Reisen, Director of Public Policy with the Virginia Chamber of Commerce, and for the reasons previously stated, the Virginia Chamber opposes this bill. Thank you.
Madam Chair, members of the committee, Miles Laurie on behalf of Genworth Financial, and for the reasons stated, we also oppose the bill.
I've got some questions here or some responses. Delegate Gutierrez.
Thank you, Madam Chair. Madam Chair, I would like to ask the patron to clarify for me, is North Carolina indeed a foreign country?
Madam Chair, I'd say to my colleague that in terms of public policy, one might think so from time to time.
Delegate Mullen.
Thank you, Madam Chair. I just asked the delegate, it seems like there was pretty universal agreement about your bill as it came out last year, and I think that is still included in this bill. Is that right?
That is, Madam Chair, to the delegate. Yes, I mean, the bill that came out last year was basically truncated to the aspect that the agencies of the Commonwealth that serve our constituents would have to have their primary call centers within the Commonwealth, and that aspect of the bill did pass.
And, Madam Chair, follow up. And if we wanted to keep that core part, the bill that many of us voted for last year, that would be lines 57 through 63. Is that right?
Yes, sir.
If we were so inclined to just go with 57 through 63, is that something that you would see as a friendly amendment, or is that something that you would prefer not to do?
Madam Chair, it's not the intent of this bill to make the Commonwealth anything less than the best state in the country in which to do business. And to Mr. Cornwell's point, I don't want to offer this bill in any way to frustrate the telecommunications industry from potentially locating in the Commonwealth of Virginia or to bringing jobs back to us. If the gentleman wishes to offer an amendment which would basically truncate the bill to its form that in which it passed the House last year, I can't tell you that I would like it, but certainly I would offer no objection to it.
Then I would, Madam Chair, so move.
All in favor, signify by saying aye. Any opposed? Motion carries.
Second.
Okay. And the motion is also to report and refer to appropriations.
Thank you, Madam Chair.
With the amendment. With the substitute. Okay. Now, ready to vote? Clerk will open the rolls. We are fine. I'm going to take a few seconds. The clerk may close the roll. The measure passes 20-0. Okay, next up is Delegate Bagby, House Bill 789.
Madam Chair, members of the committee, this legislation is comprehensive lending reform, focused on lending practices, but still ensures widespread access to affordable credit. We are addressing all of it from payday lending to title lending, online lending, consumer finance, and open credit loans.
Delegate, could you just suspend just for a moment, okay?
Yes.
I'm going to ask that that door be closed. This is such a large room, and it is something about the acoustics in here. It is so noisy. So I'm going to ask that we can keep that noise level down. And if you need to talk, could you step outdoors and have your discussion? All right, Delegate Bagby, you can proceed.
Thank you, Madam Chair. Our goal is to close the loopholes, insert consumer protection guardrails, and ensure access to credit for all Virginians. Members have not only had an opportunity to review the legislation, which is a lot, but there are also, it's pretty big, and there are a lot of loopholes that we intend to close. And so I hope that we have an opportunity, we will have an opportunity to hear from individuals from both sides, and I know you all have had an opportunity to hear from both sides as they came to your office and sent you emails related to the subject. But this is something that the Commonwealth has been struggling with for some time, and I hope that this legislation will reach a conclusion that is beneficial to the consumers of loan products in the Commonwealth of Virginia. Madam Chair.
Thank you. Any questions from members of the committee?
Madam Chair.
Delegate Byron?
Yes, is Joe Face is here. I would like to ask if he could come up and, oh, there you are.
Yes.
Before we hear from anybody else out there? Yes.
Madam Chair, would you mind if we go through the process of individuals speaking on for and behalf and
Yes, yes. As
First,
a matter
and
of
then-
fact,
and then-
I'd like to hear from members of the committee if you have any questions. Any members of the committee first? Questions? Any
Madam
questions
Chair?
for the patron?
Madam Chair.
Yes.
Just so you understood.
Yes.
I was just trying to hear from the Bureau so that I could maybe formulate my questions. So
Right.
I can wait
Okay, no,
if that's what you
that's
want to
fine.
do.
Okay, no, that's fine,
That's
that's
fine.
fine. I'm just trying to go by this process that was given to me, so I'm going to yield to the members of the committee, and now what I'll do is call for any other people from the community or public. All right?
I was just wondering if you could summarize for us, because this is a pretty big bill, what products would be under this, and then what else would be available to the public after that?
Delegate Byron, Madam Chair, Joe Face, Commissioner of Financial Institutions with the State Corporation Commission. This is a pretty broad bill, very comprehensive. It covers 4 chapters in the Virginia Code. As Delegate Bagby said, payday lending, open-end lending, motor vehicle title lending, and consumer finance. There are parts in the bill about the rate of interest. There's sections in the bill that refer to access partners. Again, it's a very comprehensive bill, covers all 4 chapters, and our role in this has been to make sure that we have the regulatory apparatus in the bill to enforce the legislation and the policy should the bill pass.
What will still be available to the public for loan access? I mean, I guess, is there still going to be options available once this happens? I would imagine there'll be a lot of people that'll just be leaving.
There will be options. I can't really speak to what will occur if the bill's passed.
Okay. I'll wait to hear from the other folks.
Okay. Question from Delegate Weber.
Thank you, Madam Chair. I guess this would be a question for either the patron or Joe or somebody. So it covers 4 different types of loans, right? Payday, vehicle title, open-ended, and what was the 4th? The consumer? Okay. I guess my question is, what the various folks that have come and I've spoken to, I've seen a variety of different interest rates, different um, things that are used to back up the loans, collateral. And that certain ones like payday versus open-ended, they're all regulated differently. So if you could summarize with the four different, paydays, is that just payday loans? How do they access capital if you fail to pay? Vehicle title, I think they take your car. But how are each of those regulated differently? I guess that might be for Joe. I don't know.
Yeah, Joe, you can have it, but let me touch on it just a little
Yeah,
bit.
if you don't
I think
mind.
our goal with this legislation was to make sure that first we were clear on what the expectation is for the lending, and then it's up to the business community to decide what kind of product they want to offer under those guidelines. And so what we didn't do, we didn't build a product based upon what the industry asked us to build for the industry. We built a product that was fair to consumers. Joe?
Delegate, I think you're asking how it's regulated now? Is that?
I guess it would be nice to see a comparison between now and how the bill adjusts each form of lending. Does that make sense?
It does. It does. It's a very comprehensive bill. There's a one rate, 36% for, as I understand the bill, for all lending products. Historically, payday loans have been secured by a check, motor vehicle by a car. Open end is just what it says, open-ended. And consumer finance have been installment loans. So this blends all of that together.
Okay.
So you'll have a product.
You have another question?
Apologize. I
Okay.
guess. One question?
Yes.
I guess. So for all four, regardless of the level of collateral of which they utilize to back up their loan, they're all going to have the same percent with nothing else, 36 with nothing else attached?
No, there's also additional fees and charges, and that's why, Madam Chair, I really wanted individuals to be able to speak, because a number of the questions that individuals are asking from the committee, and I respect the committee members have questions, but I think those answers would be those questions would be answered with those individuals that are coming in to speak. Not only the individuals that are coming to speak on behalf of it, but also those individuals that will come to speak against the bill. And I think those individuals that are coming to speak on behalf of the bill, which include the Attorney General's office, will be able to answer some of the questions that you all have, along with some of the individuals that are saying that they, despite this legislation, and in fact, because of this legislation, business will come to the Commonwealth to provide loans.
Thank you. Well, we're at the point right now that we can talk about those, or talk with those, and invite those members of the public who would like to speak in support of the bill.
Good afternoon, Madam Chairman, members of the committee. I'm Jeff Smith. I represent the Virginia Financial Services Association, which is members or licensed finance companies. They've operated in the Commonwealth since 1918. Making installment loans to the consuming public. Their interest rates are 36% and down. They're currently under a regulated market of 36% rate caps on loans up to $2,500. It's deregulated on loans above $2,500. We do underwriting of these loans. We do credit investigation, employment verification. We do credit checks so that when the customer completes an installment loan, their credit rating generally goes up. For the last 3 years, we have tried to implement meaningful regulation back into the deregulated rate market on loans above $2,500. Our membership, even in a deregulated rate, doesn't charge triple-digit interest. And that was what was surfacing in the Consumer Finance Act. We don't take a position on payday. We don't take a position on title, opened-end, or any other lending avenue. We stay in our own lane. And that's what our reforms were trying to do for the last 3 years. Delegate Carol Foy's bill that was in here last week, 1265, I believe, mirrored Senator Surville's bill 33, which is in the Senate now, that we offered to bring forth some sensible, meaning reforms and modernization. And her bill was rolled into this one. So we support this bill on Chapter 15 reforms that we've been asking for. Likewise, on the Senate side, with Senator Locke's bill, which is similar, I don't know what they're going to do over there with the two bills, Senate Bill 33 and the other with Senator Locke, but I can tell you that we support these reforms that we've been trying to do, and it doesn't affect any other lender in Virginia, only licensed finance companies.
Thank you. I see the line is quite long,
That's it.
so I just want to mention that brevity is so well appreciated in this committee. It makes us so happy. So keep that in mind.
I will keep that in mind.
Okay.
Thank you, Madam Chairman, members of the committee. Dave Irvin with the Attorney General's office. I'm part of our Consumer Protection section. The Attorney General supports this bill across the board. We do believe that it provides comprehensive reform to and modernizes our consumer finance laws, the 4 lending options that have been discussed. We believe it does so in a way that will expand consumer access to affordable consumer credit. The key word there is affordable. To get into the weeds just a tiny bit to answer some of the questions, in terms of consumer finance companies, this basically caps the interest at 36%, but it allows them to charge a 6% processing fee with I think a minimum processing fee of $50 and a maximum processing fee of $150. The goal there is to encourage those lenders to make more loans in the $2,000, $1,000, $500 arena. With formerly payday loans, what would be short-term loans under this bill, it will allow the 36% interest rate, but will also allow a modest processing fee, which I believe is 8% of the loan up to $25, and will allow that on a monthly basis. So they will be able to charge more than 36%. With title loan, they can charge that 8% processing fee up to $15 per month. Because it's a secured loan, the amount of the processing fee is less. With opened-end credit, which right now is pretty much totally unregulated or very limited regulation, they are allowed a 36% fee plus a $50 annual participation fee. We believe the bill is important because it closes 3 significant loopholes that have been exploited in recent years to harm consumers. This bill will require companies operating over the internet who are engaged in a consumer finance business, it will require them to become licensed and to be clearly subject to our laws and our rate cap. It will limit the interest rate that applicable to consumer finance companies when they make loans above $2,500. Right now, there is no fee cap in that area. It will limit the interest rates that are available to opened-end credit companies. As I said, right now they are unlimited. We believe the bill provides for a consistent and sound public policy. It will require internet companies and brick-and-mortar companies. The laws will apply equally across the board to them. That was a goal of a couple of years ago with some legislation. And it's been something that we've sought for a few years.
Could you suspend just for one moment?
Sure.
We have someone that has a question, a member.
Yes. I have a question, Madam Chairwoman.
You may proceed. Mm-hmm.
I asked the gentleman, does the Attorney General's office believe that you'll be able to enforce offshore lending, lenders that are out of the country?
The short answer there is yes. The law is intended to exercise maximum legislative jurisdiction. If you are making loans to Virginians, whether you're doing that from a brick and mortar location on Broad Street or whether you're doing it from the Cayman Islands or North Dakota or wherever, you are required to be licensed here. If you're unlicensed and you're making loans to citizens here, the loan is null and void. So that consumer would not have to pay that loan back. That entity from whether it's North Carolina, North Dakota, or the Cayman Islands, I suppose would be put in the position of having to come and try to collect if the consumer stopped paying here. But the short answer to your question is yes, we believe internet companies will be required to be licensed. They'll be permitted to be licensed. That will add additional players in the marketplace to make loans, but they will be subject to the law that y'all pass. In terms of the consistent consumer credit policy, as I say, this requires everybody, brick and mortar, internet, to operate by the same rules. As a general rule, it provides for a system where the interest rates will go down as the loan amount goes up and the loan term increases. It also provides for a system where the interest rates go down when you have a secured loan. Title lenders are able to charge less because their loans are secured. Finally, we believe the loan policy here promotes a system where you have lenders, we're talking about subprime borrowers who may not be able to get a loan from a bank or a credit union, where they will be able to have lenders who can offer them a life preserver or a life raft in times of an emergency, and not a system that allows a lender basically to throw an anchor that becomes a debt spiral and just leads to bankruptcy. So for all of those reasons, we ask you to support the bill. Thank you.
Thank you. And I thank you. You have been quite thorough. So if there's anyone standing in the line who agrees with what has been said and wants to say something different, it is fine for you to come up. Otherwise, you can identify yourself and say, I disagree with everything he has to say, and have a seat. But feel free to come up and identify yourself.
Madam Chair and members of the committee, I'm Alex Horowitz with the Pew Charitable Trusts. Pew has found that Virginia has among the weakest consumer protections in the country for payday and title loans. Virginia is one of just 6 states where payday lenders use a line of credit statute with no rate limit, and one of only 10 states with no rate limit for loans above $2,500. And it has among the highest car repossession rates in the country for auto title loans. HB 789 would fix that by closing all loopholes, regulating internet lenders, and enabling widespread access to credit with affordable payments, fair prices, and reasonable time to repay. This is different than some proposals you've heard in the past that just have a straight 36% cap and no fees. It has allowable fees to ensure there is adequate revenue to make widespread access to credit available. Consumers could still borrow easily, as happened in Colorado and Ohio, which enacted similar reforms in 2010 and 2018. Many of the same lenders operate in Colorado, Ohio, and Virginia, but they charge Virginia families prices 3 times higher. Borrowing $500 for 4 months from the same lenders costs $110 in Colorado, $160 in Ohio, and $480 in Virginia. HB 789 will bring Virginia in line with those states. In 3 ways, it's more flexible for lenders and borrowers than Ohio's and Colorado's laws because it has a higher limit, allows holding vehicle titles, and enables competition from lower-cost lenders. Pew supports HB 789 because it will save Virginia families more than $100 million annually. Thank you.
Thank you.
Madam Chair, members of the committee, my name is James Gutierrez. I am the CEO of a company called Aura. I grew up in a low-income community in California. I founded 2 companies like Aura that are focused on providing small loans to help people build a credit score. A credit score changes the lives of someone, helps them build wealth, helps them buy a home one day and build equity. So it's so crucial that we help low-income people do that. Our average borrower is $38,000 a year, and we lend mostly to people that don't have credit scores or have low credit scores. We offer loans of $300 to $4,000. And we report everybody to the credit bureau so they have that opportunity. 67% of our borrowers see an improvement in their credit score by over 300 points. We provided over 520,000 loans totaling over $725 million, all the low to moderate income households in California, Texas, Illinois, and Arizona. We have not begun lending in Virginia because the statutes today don't really enable our type of a responsible small installment loan. We would love to enter the state, and so we highly support this bill, HB 789, because it would enable us to be licensed and to begin entering the state of Virginia and to set a level playing field for all lenders. So I kindly ask for your support and thank you for your time.
Thank you.
Madam Chair and members of the committee, my name is Tony Huang, and I'm the CEO of Possible Finance. We support House Bill 789. We're a financial technology company based in Seattle and make small loans via a mobile app. Most of our loans are between $200 and $500. We did not operate in Ohio before it enacted payday loan reform. Once it set a level playing field for all lenders, we became licensed and began offering loans at much lower prices than were available from any payday lender previously in Ohio. The rates are high enough that we choose to lend there, and low enough that consumers save hundreds of dollars each year annually. Our experience in Ohio has been very positive, and our customers have gained access to much safer and lower cost credit than they had prior to reform. But Virginia law has not been updated so efficient lenders can profitably offer affordable small installment loans. Borrowing $300 for 2 months in Virginia today from payday lenders cost about $150, while we could profitably offer the same credit for just $60, but only if HB 789 is enacted. We strongly support it. Thank you, Madam Chair.
Yes, Delegate Weber.
Question for the gentleman. So you said that you have an efficient lending system where you can do it over the app. Your competition is a payday lender who charges what you claim is a very high percentage rate, and you claim a very low percentage rate. Wouldn't that in fact be a market advantage in the current today market? And why is this bill so important that you need this bill to compete when you offer the same kind of product at a much lower percentage rate?
Delegate Weber, that's a really insightful point. Under the law today, we are not allowed to offer a small dollar installment loan. All loans have to be paid on a bullet payment. So if you borrow $100, you have to repay that in full and your $20 or so fees all at once. And that's very difficult for lower income individuals to come up with that money, and that's why they get caught in debt cycles where they constantly retake out the same loan every 2 weeks. We just want to allow them to repay a small portion at a time and help them build credit history, and that's currently not allowed.
One more question, Madam Chair. May I ask one more question?
Yes.
So if I am going to be a customer of yours, okay, and I want to borrow $400, I do that on the app. How do I pay you back?
Madam Chair, Delegate Weber, if you were to borrow $400 on our app, you would potentially receive the funds, get approved and receive the funds within minutes in your bank account. And on your next 4 payroll dates, say you get a paycheck once every 2 weeks, we will automatically deduct $100 plus fees once every paycheck for your next 4 paychecks. So you have time to catch your breath, and consumers can always pull up our mobile app and reschedule any payments. No questions asked. We never charge a late payment fee. It allows a really easy repayment.
Thank you. Oh, another
Sorry, may I have
question.
one more question. So you essentially get access to my bank account, or I give you access to my bank account via the app. How transparent are those fees, like when I'm going to borrow money as a consumer? Because obviously if you're going to take if I borrow $400 and it's $100 for 4 installment periods, it'd be $100 plus fees, and that the consumer's notified of that as they take out the loan?
Madam Chair, Delegate Weber, that is correct. All fees are transparently displayed before the user takes out credit, and as part of the loan application acceptance process, and it's all regulated under both federal and potentially state lending laws. So Truth in Lending Act and disclosure of APRs and fees are all very transparent to the user in our mobile app.
Thank you so much.
Thank you.
Next person.
Madam Chair and members of the committee, my name is Doug Fari. I'm co-founder of Employee Loan Solutions, provider of TrueConnect loans. We offer a small consumer installment loan structured as an employee benefit program. So we're available to over 1,000 employers across the United States at no cost to the employer, from big companies like Comcast to city and county governments like Culpeper here in Virginia. The employee can apply online and have the loan repayment paid over a year through automated payroll deductions through the same process that they use to pay for other payroll deducted benefits like health insurance, life insurance, et cetera. And we support House Bill 789. Thank you.
Thank you. Thank you.
Madam Chair and members of the committee, my name is Brandon Mays. I'm the President and Chief Financial Officer of Atlas Credit Company. We operate as a traditional installment lender, and we offer affordable loans. We've been doing that since 1968, so we've been doing this for well over 50 years. To date, we've serviced about 2.5 million consumers, lending approximately in excess of $3 billion to all of our consumers. The bulk of our customers are living paycheck to paycheck and similar to those that your current payday lenders service here. We know that from 50 years of experience and operations that we could operate profitably if House Bill 789 comes into effect in Virginia. And if it does, we stand willing and ready to open branches, hire Virginians as employees, and begin responsible lending. Thank you.
Thank you.
Madam Chair, members, Tom and Torcio, Virginia Catholic Conference, we support the bill. Thank you.
Thank you. Thank you.
Madam Chairwoman Dana Wiggins, representing the Virginia Partnership to Encourage Responsible Lending. We support the bill, and thank you all for reading the stories of our borrowers. Thank you.
Great job.
Rodney Hunter, pastor, Wesley Memorial United Methodist Church, and past co-director, Virginia Interfaith Center for Public Policy. We too support this bill and urge you to support it and back it, for the peoples of the Commonwealth need your support. Thank you.
Thank you.
Madam Chair, members of the committee, I'm Natalie Snyder. I'm the State Advocacy Director for AARP Virginia, and we support this bill. Thank you.
Thank you.
Madam Chair, members of the committee, Tram Nguyen with New Virginia Majority, and we enthusiastically support this bill. Thank you.
And thank you.
Jay Spear with the Virginia Poverty Law Center. Affordable payments, enough time to repay, fair prices for borrowers and lenders, widespread access to credit, but best of all, we close all the loopholes, and you won't see us back here every year on the same issue like we have been year after year.
And that was just wonderful. Thank you. Okay, anyone to speak in opposition to the bill?
Madam Chairman, members of the committee, I'm Scott Johnson. I represent Community Loans of America. You've heard a lot about closing today. I want to add one more closing to it. You pass this bill, you're going to close a lot of access to credit for Virginians, and you're going to close a whole lot of doors, and that's what our side of the argument wants to share with you. You deal with a lot of complicated pieces of legislation every session. This bill we first saw when it was about an hour before it was filed. It was 28 pages long. And last night at 7 o'clock, we got the substitute that I think's laying up there with you. It's 67 pages long. I'm sure each of you have read it and know what it does. But our client, Community Loans, they make car title loans and open-end loans. This is a significant move in the industry. Please be thinking of your consumers and thinking of our employees. I want to introduce Bob Reach, the president of the company, to tell you about his business and the loans he makes.
Madam Chairwoman, members of the committee, thank you for hearing the testimony. My name is Robert Reich. I'm president of Community Loans of America. Last year in Virginia, we made over 20,000 secured auto title and unsecured open-end loans, over $22 million worth of loans into this particular economy for the year. The impact of this particular bill is an absolute shutdown for us. We operated in Colorado. When they passed their bill, we closed our 18 stores there. When Ohio passed its bill, we shuttered our 43 stores in Ohio, making secured and unsecured loans. If this bill passes, that will likely be the consequence here for us as well. Thank you very much. We view this bill not as regulation, but as extermination. Thank you.
Thank you. Delegate Bourne.
Good afternoon.
Excuse me, one moment. Let's suspend.
Madam Chair, I can wait and just ask general questions after we get through the opposition.
All right.
here.
Okay.
Madam Chair, members of the committee, B. Gonzalez with Populous Financial, formerly Ace Cash Express. I just submitted to the clerk to distribute to the members the total of payday lending loans made in Virginia last year. Because I think there's a lot. We are a payday lender, and the same folks that have been the proponents of the other bill were in the room almost over a decade ago, where we were in the room for 2 nights with Mr. Rubin trying to map out the entire short-term lending industry. And from that 2-day long session over one long weekend, we all got in a room and came up with payday lending, open-end, car title, what have you. My payday lender decided to keep his payday license. So the issue was, if you were a payday lender in Virginia, you could keep your payday license, or you could give up that payday license and go into car title, open-end, and another product line. My company decided to stay in the payday lending business. We have 23 locations in Virginia. Those regulations do not allow me to loan more than $500, does not allow me to loan more than 1 loan at a time. If you look at the numbers from 2007, there were 832 payday locations in Virginia. There were 3.5 million loans back then. Just in 2018, there's 161 locations and only 283,000 loans were made last year. Payday lending is a very short-term loan, and so this bill pushes us into a different lane. We stayed in our lane. We made a commitment to stay in that lane. We provide a certain product. And now what you're asking us to do is get on a different highway altogether and provide a different product altogether than what we've been providing for the last decade. I promise you, if you pass this bill, as expansive as it is in such a short period of time, without letting us all get in a room and hammer out another deal, you will come back years from now and reinstate this statute. I promise. Thank you.
Just a moment, please.
Yeah, and
Delegate Bourne.
Yeah, I do want to ask a question about something that was just alleged, referenced by Ms. Gonzalez. You said that if we could get in the room and hammer out another deal, we might be in a better place. As someone who's been involved with the bill, we've been in a lot of rooms.
Madam Chair, Delegate Bourne, there hasn't been an issue with payday. I will tell you that I spoke to the commissioner over the last couple of days. There were 12 complaints on payday lenders regulated in Virginia. Every year, even from that negotiation a decade ago, the next year the proponents of this bill came back to repeal it after we had made a compromise. And every year since then, I've stood before you, and they've presented anecdotes, they've presented stories, and I've met every single customer that they've brought up. And guess what? Every loan that they took was not from a regulated Virginia lender. It was from an out-of-state, out-of-country online lender. That's not who we are. We cannot charge $4,000 for a $260 loan. That's not the Virginia statute that you passed. It's not the Virginia statute that we have abided by the entire time. So I would love to get in a room and really work all this out. But I will tell you, every overture that I have made has been, nope, we're moving forward. So I will tell you that I have really tried. I've presented these numbers. I've shared these numbers with members to show what payday lending is and what it is not. And payday gets brushed with a larger of industry brush than it should be.
Madam Chairman, members of the committee, Reggie Jones, representing Advance America, a payday lender, a licensed payday lender in Virginia. It was Advance America that originally brought the legislation 20 years ago. There were unregulated payday lenders in Virginia at the time, and it was determined by the Corporation Insurance and Banking Committee, then Commerce and Labor, now Labor and Commerce Committee, that it needed to be regulated. And that's what we did. We worked to get a regulated industry in Virginia so that Virginia consumers had access to a regulated product. In 2009, when we went through this with Mr. Rubin as an arbitrator or a negotiator in this, we ended up coming up with something that I thought that the consumer industry thought was right for the people of Virginia. Well, as a result of that, Advance America agreed to stay with a regulated product, just as B had just said about her client, stayed with a regulated product under commitment to those people who supported that legislation. Well, what has happened with that? That made it so difficult to operate in Virginia that Advance America went from 151 stores in Virginia to 74 stores in Virginia. In Ohio, Advance America does lending in Ohio, and they had 73 centers that have closed since the legislation passed and became effective in May of this year. They've closed 73 centers there and have 21 more scheduled to be closed as they're winding out on leases. Testimony from people that were before you today talked about how we have continued access to credit. There will always be access to credit because there will always be demand. The question is it fair and reasonable, regulated for the benefit of the consumer? And I would submit to you that people are going to be driven to unregulated lenders if this passes. I know my client doesn't feel they can continue to operate in Virginia if this law passes because of the restriction on the interest rate. You know, we use an annual percentage rate on a short-term loan. It's not an appropriate way to determine the cost of a product. One gentleman got up here and said that he could come into Virginia and make these efficient loans in Virginia if this legislation was passed. Well, why doesn't he come in today? He talked about he needed an installment loan, and today the Payday Loan Act is not based on an installment loan. But what he could do, he could come into Virginia today, make a $500 loan, and then you get 2 paydays in between, so it's usually typically third week, 6 weeks before someone has to pay. He could say, okay, you pay off $100, we'll renew at $400 and pay it down. You can turn this into an installment loan. What he wants is to be able to come into Virginia and do payroll deduction. Well, you can imagine how that would benefit the payday lenders. We're not allowed to do that. But if you'll give them payroll deduction authority, for example, then it's a better chance that their loans are going to be repaid. There are things that could be done under this act to have a better regulated lender than loan process than we have today. And I would hope that you would not take the access from credit away from Virginia.
Delegate Bourne. Hey, Mr. Jones.
Yes.
I think you're, who did you say you represent?
Advance America.
And are you all operating in other states that have enacted similar reforms?
I just said they're closing their stores in Ohio. They've closed since May. They have closed. It's similar. I haven't read the full 70 pages of this bill or whatever it is.
But you are operating on some level, any level, in other states.
Closing them. They've closed 74 stores, I believe was my number, since it went into effect in May.
I understand that they're closing stores. I'm just asking, do you all have stores open in states that have enacted reforms similar to this? Maybe not the same, but similar.
Yes, we do.
Okay. And here's the real question.
Not suggesting to make any money on it.
Here's the real question. What does it cost a borrower in one of those states that have enacted similar reforms for $1,000 versus what does it cost a Virginian right now without the reforms?
Well, first, in Virginia today, we're capped at $500, not $1,000, so we can't compete in that market. We cannot charge for any other product, as some other lenders can charge for other products like give you credit life insurance or something like that to make money on that. Payday lender cannot do that in Virginia. It's very restricted. It's one thing, make the loan and get your return on that loan. Yeah, your question is, what does it cost for a $500 loan?
Yeah, I'm just trying to figure out if a borrower in, say, Ohio or some other state that's enacted similar reforms pays less total than they would in Virginia right now today without the reforms in place.
That's correct, they would.
Okay, thank you.
Yes, thank you.
Good afternoon, Madam Chairman and members of the committee. I'm Travis Bussey, representing TMX Finance family of companies under the Title Max brand here in the Commonwealth of Virginia. Title Max is a licensed motor vehicle title loan lender with 79 retail locations and nearly 200 team members across the Commonwealth of Virginia. We are proud to help Virginia residents meet the credit needs through the responsible use of emergency loans. We understand that the intent of House Bill 749 is to protect consumers, but the rate cap proposed in this bill would eliminate the state's title lending industry, and with it, a viable credit alternative for many borrowers in need. In 2018 alone, we made just over 41,000 loans to Virginians. Under the proposed rate cap, we would not have been able to make those loans to these consumers. To meet their needs, many of these borrowers certainly would have been forced to sell their motor vehicles or turn to unregulated, unlicensed lenders, since banks and credit unions, for most part, don't lend to many of our customers. So again, we ask for you to oppose this legislation. Thank you.
Madam Chair, members of the committee, my name is Robert Barada. I'm here this afternoon on behalf of Check Into Cash. Check Into Cash offers open-end lending as well as card title in the Commonwealth. We have 29 stores, all of which will close. We've run the numbers, and they cannot operate brick and mortar and offer the types of loans they do and expect to get a positive rate of return on it. The other thing I want to keep for you all to keep in mind is the risks that we manage are based upon creditworthiness of the folks that are coming in to get the loans. If banks would be in this business if the creditworthiness of the customer were to support the repayments. And a lot of times, we service and provide loans that are needed at various points of people's lives, giving them access to money that they would not be able to get otherwise. So when you look at this bill that tries to be a one-size-fits-all, you are going to be, in effect, denying people at the lower end of that creditworthiness access to credit. Thank you.
Thank you.
Madam Chair, my name is Guy Rolling. I represent Access Financial. Access operates 19 stores throughout the Commonwealth. They are headquartered in Cincinnati, Ohio. I'll be very brief. Their experience, I believe this Ohio legislation was mentioned several times about regarding this bill. And I can tell you that I've been told to just relay to the committee that since that bill was enacted, over 800 stores have gone out of business. Over 800 stores have closed in Ohio. There are now slightly over 200 left. My client is currently contemplating how they're going to close their stores. They're concerned about the layoffs for their employees and how this would even affect their home office. So I just wanted to point that out to you, and we feel like the same situation will occur here if this legislation is enacted. Thank you.
Madam Chair, members of the committee, Nicole Brenner with Reed Smith on behalf of the Online Lenders Alliance. I've stood before this committee previously supporting licensing and regulation of my industry. Speaking specifically to Colorado and Ohio, we believe that another Pew bill will restrict access to credit and result in less options for consumers. Based on data from the Colorado Department of Financial Institutions, in the first 4 years after the Colorado bill passed, there was a 17% increase in bank overdrafts. That is what consumers in Virginia will be left with if this legislation passes. I do have members licensed in Ohio under the Pew bill there. There are 20 companies licensed under the Pew bill in Ohio. You can find the list on the Ohio DFI website. And I'm happy to share with any member of the committee a letter from one of those members about their operations in Ohio. The loan amount going up in Virginia doesn't matter. This member is only able to offer a $300 loan in Ohio. At that level, they're operating at a loss after 7 months and terminating the product in Ohio. That's without stores. So this isn't about closing stores or reducing overhead. They will be closing their operations in Ohio. So that's not 20 companies, it's 19 left. Those are the options left to customers in Ohio. I'd ask you to oppose this legislation.
Madam Chair, members of the committee, I'm Morgan Guthridge. I represent Community Choice Financial based out of Dublin, Ohio. Community Choice operates First Virginia Loans here in Virginia, which has 26 stores and employs 130 people. We operate the open-end product. I'll just simply associate myself with the statements by the previous speakers and just let Mr. Grieser here, who I represent, oh, he's gone. But our understanding is we are not offering loans under the new Ohio installment law for the reasons that have been stated by the previous speaker. So we would just respectfully ask that you would oppose the legislation. Thank you.
Sorry. Delegate Byron.
Yes, I have a question. On page 5, line 253, I mean, first of all, this is a long bill, 67 pages, substitute. We've done a lot of work the last couple years on reforming this area, so there's a lot to absorb unless the goal is just to close them all down. And if that's not the goal, then I think we need some more discussion on it.
Yeah, Madam Chair, and I think that's been the argument. And individuals that make that argument, is nothing I can really say to convince them otherwise. I think we've heard a full and fair discussion about what's in the bill, what's not in the bill. Individuals have had a lot of discussion, and this is nothing new to anyone in this room. I mean, even people that are probably in here for energy know this industry well because of so much testimony that we've heard. And so I'm not here to convince anyone that they're going to stay in business or they're going to leave, or they're going to leave. We're just focused on fair practicing, fair short-term loans. And so I think we've heard individuals say that they will come into Virginia if there's a fair market. And there's individuals that we heard that say they will leave. But we're not so much concerned about who's providing the loan. We're concerned about the loan being fair for Virginians.
Delegate Wilt.
Madam Chair.
I'm sorry.
Yeah, Mike, I didn't get to really ask the question. So the one question I had, line 253, access partner. What is an access partner?
I think, no, Joe.
Just for a moment, could you suspend Delegate Bagby? Do you have a substitute?
Oh.
Could you move that?
Madam Chair, move the substitute.
Second. All in favor? Aye. Any opposed? You can proceed now.
Yes.
I'll take a stab at it. Some of the folks in the audience who will be or who will use access partners, I know the company Aura primarily uses that, but my understanding of that is there will be a licensee, a lender, and it will have access partners, folks in the community. They may be, I think they may be grocery stores, there may be people providing tax services, but they will be someone who will steer or communicate to the individual consumer the services offered by that licensee. So they're just, I think the services of the licensee are primarily offered online, but they have, as I say, folks in the community who will promote their products. The fees and charges that licensee can charge are still the same, but this is included to facilitate and to authorize that mechanism of providing a loan. As I say, others can provide more details, those who are actually going to offer that service.
And I think access partners are commonly grocery stores are common access partners, in which, particularly in impoverished communities where there may not be a place to set up shop for banking, there may be a space in a grocery store to set up a place where they can receive information to send on to the loaning group.
Madam Chair.
Yes, you may proceed.
Yes, so in following that same line, I'm trying to understand, so they're going to be servicing a loan in a grocery store, is that what you're saying?
No, ma'am. They will be the access. They will connect the individual with the individuals that will service the loan. They will not be servicing the loan in the grocery store.
They're going to be advertising it.
Madam Chair, so Access Partners would be affiliated with a licensee that originates a loan, holds it on their books, underwrites it, and the Access Partner, which would be a retailer, facilitates the loan by dispersing the payment and receiving payments. So it would be a servicing and disbursement model, but the licensee would be the one originating the loan, underwriting it, holding it on their books. And as an example, borrowing $1,500 for 12 months today in Virginia from a title lender typically costs about $2,500 in fees and interest. From the payday line of credit lender is about $3,500 in fees and interest. In California, where the Access Partner model is common, that costs less than $500 in fees and interest. So that's why it's been effective.
Madam Chair, another question.
Is there another question?
Yes, sorry. So the Access Partner, unless I look at California legislation, are they regulated? Are they registered? How do they fall into play?
Yes, Madam Chair, there's language authorizing them, and they have to be under contract with a licensee under Chapter 15 that's licensed and regulated by the Bureau of Financial Institutions in order to operate as an Access Partner.
Another question, Delegate Wilt.
Thank you, Madam Chair. Question for the patron.
You may proceed.
Yeah, Delegate, your last comment when you were at the dais, could you say that again? I mean, something to the effect you didn't care about.
I think it was clear. What I said was we're really concerned about the level playing field, and this bill is intended to level the playing field as relates to those individuals that are receiving the loans and those individuals that are giving the loan. And so I appreciate your question, but what we're intending to do again is to level the playing field, and I think what we're hearing is threats of leaving. But then, as you heard Delegate Bourne's questions, this has been acted in other states and they didn't leave.
Madam Chair.
Yes, I didn't see your light. I'm trying to see who's speaking. Delegate Wilt, okay.
Thank you, Madam Chair. Yeah, and Delegate, please understand.
Yes, sir.
As I hear all the conversations, I mean, at the end of the day, it sounds like everybody's concerned about the customer, the consumer. And I mean, just, getting this much language here at basically the 12th hour, it gives me great concern. And I'm not an expert by any stretch. And so, but wow, there's so many moving parts here that gives me fear that, at the end of the day, the customer, in my business, we compete against prices and so forth. So I can promise you the cheapest product in the world, but if I don't deliver, you didn't get anything. And so that's my concern about the people that count on all of it. You can argue on both sides of the issue, but at the end of the day, if it hadn't been thought through, fully, and the folks that count on these types of loans don't have any option, then where are they left? And just a statement, not
Thank you so
meaning
much.
to.
Thank you.
Yes.
Thank you.
Thank you. Is there another gentleman who would like to speak to the bill?
Madam Chairman, I apologize to the committee, but we just learned something when the substitute was handed out. What had been shared with the industry last night around 7 o'clock, that substitute had been printed at about 5:16 p.m. The substitute handed out today, it says it was printed at 10:34 this morning. We've not been able to go through to see if there are any differences or not, and I just want to be clear for the record so you know what we don't know or do know. Thank you.
Thank you. Delegate Bagby, would you like to wrap up?
Ma'am, I think we had a full and fair discussion here today, and I don't have anything else to offer.
I do want to thank everyone who came out today to speak in support or in opposition to the bill. I believe that we have had a fair and open discussion, and the bill has been well vetted. We have already had a motion with the substitute. Oh, we need a motion to report with the substitute. Is there a second? All in favor signify by aye. Any opposed? You can register your vote now on the electronic voting machine.
Madam Chair?
Is there a question, Delegate Weber?
Just may I speak to the motion? As I stated earlier in the presentation of the piece of legislation, there's a lot of moving parts in this particular piece of legislation. And while I understand the need or the want to try and create a level playing field, I'm just going to need more time to understand how these level playing fields become level when certain aspects of the 4 or 5 different loan apparatuses function significantly differently in regards to how they collect, what kind of collateral they they put up, et cetera. So unfortunately, I'm going to vote not in favor of the legislation to make sure that it stays in the contested docket.
All right. The voting machine. The clerk shall open the rolls.
But we are videoed.
That's true.
The clerk may close the roll. The measure passes 14-8. Once again, thank you all so much for being an active part in this long piece of legislation, but quite significant. Okay. Okay. All right. Okay. I see Delegate Sickles. He's waving his hand in the air. He wants to be recognized. Could you come up and discuss your bill, House Bill 155?
Thank you, Madam Chair, members of the committee. This is a very exciting bill. It is in the banking section of the code. Bank holding.
Delegate, could you just suspend just for one moment?
Yeah, certainly.
We've got a lot of people leaving at this time, and as a former middle school teacher, I have issues with noise.
I don't blame you. Every time they open that door.
I know it is, and I was about to ask, too, if anyone is standing in the back, whenever that door opens, please close it. It sounds like a game, a sports competition going on out there. I'm sure it is. I'm sure it is. We're going to give them a few more minutes. No, not minutes. Let's just say seconds. Okay. Okay. People in the back, would you close the door? We're about to begin now. All right.
So, thank you, Madam Chairman. I'll start again. This bill is a request from the State Corporation Commission. It's a technical measure. In the bank section of the law, bank holding companies are allowed to transfer a trust power to a wholly owned subsidiary, and there are procedures for that under 6.2-1059. This bill adds a trust subsidiary under common ownership. There's a definition of that on line 38, and it just establishes a mechanism by which a subsidiary bank of a Virginia bank holding company that holds trust powers may be substituted in every fiduciary capacity for a trust subsidiary under common ownership with that bank. You got that? So that's what it does. It is just gives some more flexibility. Joe Face is here to talk to it if you need to. The key thing, if you're interested in this, is to read the definition on 38, and that means that
Hey,
you
whoa,
can,
whoa.
okay.
I have a motion.
The chair recognizes Delegate Kilgore.
I move to report.
It's been properly moved and seconded.
Thank you, Madam Chairman, members of the committee. You're going to have a test on this, waiting in your desk in the morning. Thank you.
We're voting now, Delegate. We're voting.
Just for that, we're going to put you on the.
Okay. The clerk may close the roll. The measure passes 18-0.
Thank you, Madam Chair, members of the committee.
Okay. We're moving right along. We have how many more bills? About 8 more bills. Next is, was Delegate Davis here? House Bill 354.
Yes, ma'am. I've got two for you. 354. Let's see.
Once again, shut the back door. There's a party going on out there.
Okay, Madam Chairwoman, House Bill 354 is kind of unique in its aspect. First, there is a substitute, I believe, in front of you. If the committee wouldn't mind moving that one.
Second. Second. All in favor? Any opposed? You can proceed.
Thank you, Madam Chairwoman. So there was a situation in Virginia Beach where there's a gentleman with a severe mental illness whose mother has the power of attorney over all financial affairs in place, and this gentleman has been in and out of hospitals, and there's a power of attorney that the credit union down there has. He was offered a credit card. Knowing this, his mother went down there and brought her power of attorney and said, look, can you please not give him this credit card? He doesn't have the ability to repay this. Additionally, he has major illnesses, mental illnesses, and here's the power of attorney. They gave it to him anyway. After issuing the card, she went back and said, look, I know you've issued the card. Can you please shut this down? He can't pay you back. They didn't. What's happened is he ran it up. And not that much, about $5,000, $6,000. He has since been accepted into a group home, but now he's been denied ability into the group home based on his credit report that's been reported because he has not been able to pay the bill. What this does is says that if a power of attorney goes down to a financial institution and delivers that power of attorney, giving them control over the financial rights of an individual, and request that a application is not looked on favorably, or if there already is credit extended, that credit then be turned off, and the institution fails to do so, that anything after that point the bank becomes liable for. It can't go after the individual for, and it cannot adjust the credit report on that individual. Madam Chairwoman, I would say that you're going to hear from the banks and the credit unions. They have been amazing, the people you're going to hear from. It just so happens to be that this one credit union is the only one I'm aware of that is not a member of the Credit Union Association. I don't know how many of you have called a business on behalf of a client or on behalf of a constituent and has been told that you are not allowed to call the president of a company, nor are you allowed to call anyone in senior leadership, and we are not going to give you a phone number so you can even call on behalf of your constituent that assist in that matter. That's what I'm dealing with, been dealing with for the last 2 months. The Credit Union Association has been extremely helpful, and I would ask that this language continue to go forward while we're still kind of working through some of what may be a final solution, Madam Chairwoman.
Thank you. Delegate Lindsay.
Yes, sir.
My concern is that as I appreciate your bill, you're asking that a person who is the attorney in fact be positioned to have more authority in the actions than the person who's actually making the power of attorney. And isn't that contrary to established legal principle?
So the amendment that you see here, Delegate, was drafted by the bankers. I agreed to put it in. There may have to be some tweaks. I think what you're going to hear from the bankers and the credit union is for this body to please consider letting this go forward while we continue the tweaks. The initial draft was not necessarily the attorney in fact, so we're trying to All this is happening very dynamically, and we're trying to somehow get to a solution that we can resolve without impacting all the banks and credit unions, and kind of honestly for one bad actor that's out there that no law seems to be able to bring them in.
Delegate Weber.
So this is still a work in progress?
Yes, sir. It is a work in progress that all the stakeholders have been working on for the last, I would say, month.
So exactly what is it that you want us to do?
What I would ask, obviously the stakeholders I'm sure would like to speak, but what I would ask is that this body look favorably on this piece of legislation. I know there's precedent, we've done it before. Have it come to the House. There may be a floor amendment coming forward as we continue to dynamically work on this. The intent is not to inadvertently impact any banks that are good actors and operate in good faith, but we have a bad actor here that no one can seem to bring them even to discussion.
Madam Chair?
Yes,
I have a
Delegate
motion.
Wilt.
I move that we pass the bill by for the day.
All in favor?
Aye.
Any opposed? The bill's passed by for the day.
Thank you very
Delegate
much.
Davis, you have another bill?
Yes, ma'am.
House Bill
1550. Yes, ma'am.
And then Delegate Scott is up next.
Madam Chairwoman, House Bill 1550 has to do with abuses by a out-of-state franchisor. The situation that exists in many cases when a person trusts a franchisor to enter into their business model, they do so expecting certain things and being given certain supports. That's all identified in the franchise disclosure agreement. Sometimes things aren't quite what they seem. There is the ability for a franchisee to come out from underneath a franchisor's contract, but in some cases, the franchisor tries to push on the non-compete agreement. What this does is it says that if a franchisor does not have a franchisee within 50 miles of the franchisee that has come out from under the agreement, that they cannot enforce a non-compete agreement. And there's a gentleman here that can explain how this has come about in a real-world situation that he's dealing with and why his company and his employees may lose their jobs soon because of it. And I'd like for him to have a chance to speak when the time is appropriate.
Okay. Any member of the committee have any questions? Delegate Wilt.
Madam Chair?
Yes.
Delegate, what's special about 50 miles?
So we wanted to be big enough where it wasn't just if there isn't an adjacent territory being taken. So Delegate, was almost an arbitrary number. We had a bigger number in there initially, but the concern was not wanting to cross the state line. So we looked at 50 miles, which is about an hour from the furthest point of that of that franchisee's territory. But if this body sees fit, that can be adjusted. We just wanted to make sure it stayed within the Commonwealth.
Okay.
Madam
Delegate
Chair?
Sullivan.
Madam Chair, can I follow up?
Follow up.
Yeah, thank you, Madam Chair. Delegate, I mean, it would seem to me that it would kind of, the area would kind of depend on what the business is.
And Delegate, I would say that that's true, but if we make it even larger, we're amenable to that. But if a franchisor cannot get a franchisee in the state besides the one leaving, then it speaks to their model and their ability to take care and provide the services promised to their franchisees. Having been in this industry myself quite a bit, I do know the power given to franchisors. Most recently, I think last year, we actually put laws in place to protect franchisees in the automotive industry against abuses by out-of-state franchisors in the automotive industry. And that's kind of what we're looking to do here as well, is just put certain protections in place. And I think if there's no other franchisees within a certain area, I think it says something about that franchisor's ability to provide the promised services that were initially promised.
Delegate Mullen.
Thank you, Madam Chair. Madam Chair, I would ask the gentleman, so every bill has a story.
Mm-hmm.
What's the incidence of behavior that that brought this on and that we're trying to correct?
And Delegate, I would ask that I would like one of the speakers to be able to convey that. He can tell the story better than I can, so I would appreciate that if I can bring him up now or whenever it's appropriate.
Thank you, Madam Chair.
Have another question. Delegate Sullivan.
Thank you, Madam Chair. Delegate, you keep talking about 50 miles. The bill in front of us is 150 miles. Do you have an amendment you'd like to offer?
I'm sorry, yes. Madam Chairwoman, can we please move an amendment? There's an amendment in there, and I do apologize.
Second. All in favor? You can proceed.
Okay.
As
And
amended.
it is, so it's 50 miles, and the reason why it was put into 50 was just keep it within boundaries. Another way of doing this, I was talking with the gentleman that's been impacted, is maybe just putting clarification language in there that within X miles, whatever this body deems appropriate, not to cross a state line would also be appropriate. We just need to stay within the Commonwealth of Virginia.
Okay. You have someone, witnesses, anyone speaking
Yes.
in support of the bill? Yeah, we can't.
Madam Chair,
going on that
distinguished
briefly thing.
committee. Yep, no sweat,
Yes.
brevity. We're great at it. Good afternoon. My name's Mark Taylor. I'm the owner of Landscape Plus, a commercial grounds maintenance company in Hampton Roads, Virginia. In 2012, I was approached by a franchisor out of Waco, Texas. Short story, I bought into the franchise, ran it for 6 years. Everything wasn't what we expected it to be, what we were sold, a bill of goods. And so at some point, we decided to terminate. I think that was mutual on both our parts. When we got out, there was two things. One was a monetary settlement, which, hey, we could work out. The other was a non-compete issue. So now we had this company from Waco, Texas, who wanted to come here and tell me not only, hey, do you need to write me a check for X, which we can work out, that's doable, but now you can no longer do what you were doing before you became a franchise, while you were a franchise, and now that you're out of a franchise, now there was an assumption that they taught us everything we knew in there, but now on the back end, our company, we employ 35 to 40 guys, all making $12 to $20 an hour, and now they want to just put us out of business for putting us out of business sake. So this is kind of a David and Goliath situation here with an overreaching company out of Texas trying to tell us, that, hey, you not only can you that you owe us some money, that you no longer can compete as well. So our feeling is that, hey, that this bill was needed to keep all of our workers, as well as my livelihood and, our vendors and all of our support staff employed, just because there was somebody, and the whole kicker is there was nobody else in our metro area in Hampton Roads that could even service our accounts, service our clients, do the work. So it wasn't like there was anybody else competing. This is just a non-compete to enforce it, just to make a point. And so here we were looking for a protection for the small business owner of Virginia, that we, could come here to you guys to look for some support on behalf of our small business and other companies like ours in this situation, that, hey, we can still go on, we can still make a living, we can still provide our customers great service, because there's no one else here in their company related to them, affiliated with them to do the work.
Delegate Mullen.
Thank you, Madam Chairwoman. And I'm not sure if this is a question for I'm not sure if this is a question for council or not. And forgive me, I'm a criminal lawyer, not a civil lawyer. Is there a interstate commerce clause issue with something like this?
From my understanding, I don't know about an interstate commerce law, but I do believe that when a situation like this arises, that a Virginia court is going to look at it and, is going to enforce what the state of Texas would like them to do under this agreement if there's not something like this put in place.
No, I think what I'm asking is sorry, Madam Chair. I think what I'm asking is actually specifically about constitutional provisions that would limit prioritizing certain types of commerce.
I may be able to help with that. First of all, I'll talk to the attorney in the back, and I may be able to help. So when a franchisor comes into being, they have the franchise disclosure document. The franchise disclosure document discloses everything about the franchise to future franchisees and potential franchisees. Everything about that franchise disclosure document has to comply with the laws of the state they're being offered in. So in many cases, you'll see franchise disclosure documents that will be one for Virginia and maybe one for Florida that's different because they first have to comply with the laws around that state. So I can't speak to whether the actions of this body would impact this gentleman today, but it definitely could be put in place to impact other franchises that are bought going forward, if that helps, Delegate Mullen.
Madam Chair, one final follow-up, but I mean, am I incorrect to say that we are now prioritizing Virginia commerce over out-of-state commerce?
I would say that we are putting protections in place for Virginia businesses when dealing with out-of-state franchisors. It'd probably be the way I put it.
So this applies to out-of-state franchisors, but not to in-state franchisors?
And point taken, it would actually apply to both.
Delegate Sullivan.
Thank you, Madam Chair. I guess a question for the witness. I assume your franchise agreement has a mileage number in the covenant not to compete?
Right now, there's no mileage. I can't go compete anywhere in this nation for that fact, according to the
Well, it's not my
agreement.
job to give you legal advice, but I'm not sure that's enforceable in Virginia. Just a comment, Madam Chair.
Yes.
Delegate Mullen commented that every bill has a story. Every covenant not to compete case has a story. And I'll associate myself with Delegate Wilt's comments. I mean, I've litigated a fair number of these, and it really does depend on the facts of every individual case. I've seen courts enforce and throw out covenants that have 5 miles in them, and I've seen a court enforce a worldwide covenant not to compete because it depends on the kind of the business. So I'm going to, unfortunately, I'm sympathetic to your situation. I'm going to vote no on this bill simply because I think we should not be weighing in on a body of law that's already out there, which has a lot of flexibility in it and a lot of precedent in it. And I would suggest that you get a lawyer.
Delegate Gutierrez.
Thank you, Madam Chair. Madam Chair, I would ask the patron, does this set, well, you mentioned the automotive industry already, but does this endanger Virginia's being number one for business if out-of-state franchisors are now going to look and say, if I open franchises here, then in a few years they can shut me down and go into the same business?
Delegate, that's a great question, and I would say no. And the reason why is so I used to be a franchisor. I know kind of how this works. I can sell franchises if I want for $1. If all I have to do is get someone to open up within 50 miles of someone leaving my territory, and I've got a good model, I can give it to them for $500, $5,000, or $1. So that protection's still there for a franchisor that has a good model. Additionally, franchisors have entered into all other states, and many of them are more restrictive than Virginia ever is. This is just a protectionary measure for franchisees. And as you heard the gentleman speak, he was in business doing this. They approached him and said, will you join our franchise? We can help support you more than you're able to do today. He did. Things changed. And now he's stuck. And that non-compete's holding. I know that, so I know what his legal bills have been to this point, to the delegate's question. And having been a franchisor, I know what I can do with those non-competes. Because since franchisors by design pretty much are, in most cases, can franchise in all 50 states, it opens your geographic area quite a bit. And there's nothing that prohibits a franchisor from saying, here's my model, and then, oh, by the way, we're going to make a change now. I want your store to look like this. I want your build out to do this. We have sole control over the look, the operations, and everything. I can tell you pretty much who you should be hiring and who you shouldn't be hiring. So this actually is a protectionary measure for franchisees, especially for ones like this gentleman here, who had a great business, thought he was getting more. They came in. After years, things went south. He's offering to pay the termination penalty to get out of the agreement, but now they want to enforce a non-compete to put him out of business and his employees out of work.
You're born.
Madam Chair, I don't necessarily have a question. I'd have a motion at the appropriate time, but I don't want to prohibit anybody from asking questions or making comments that they might have.
Do you have anyone to speak in opposition to the bill? Delegate Bourne.
Madam Speaker, and certainly I would echo the Vice Chair's comments and certainly sympathetic to the story, but given sort of the questions and concerns that have been raised, I would just move that we lay this bill on the table.
It's been properly moved and seconded that we lay the bill on the table. All in favor? Aye. Any opposed? It's open. Has everyone had a chance to vote? The clerk will close the roll. The measure to lay the bill on the table passes 15-6.
Thank you, Madam Chairwoman.
Thank you. Okay. Delegate Scott.
Good afternoon, Madam Chair, members of the committee. First of all, I'd like to introduce an amendment in the nature of a substitute in this matter.
Second. Okay.
Do we have that?
I think we're
amendment?
all
Do you
receiving
want me
it.
to explain to you what it does real quick?
Yes, but let me just also say, Delegate Helmer is here. You're up next.
Selling me down the river.
Wampler is next. Is Willett here? Okay. Okay. Explain your substitute.
So the substitute, basically puts in place a provision or an exemption rather for our shipbuilding industry and those other folks who are government contractors who by law cannot may not be able to bring folks in who are not citizens to work in sensitive areas. So that's what this the substitute does.
Okay.
And so, Madam Chair, the bill over. So I would move the substitute. Do we need to vote first and then go back to the original bill?
No, it's been moved and seconded.
So you'll have to vote.
Okay. Any questions to the patron? Any questions? Anyone from the public would like to speak in support of the bill?
My name is Robert Field. I'm with Madam Chair, members of the committee. My name is Robert Field. I'm with the Department of Labor and Industry, and this is our bill to address a requirement that the Federal Office of Apprenticeship had that we have to come into compliance with to maintain our program over time. We're very proud of our apprenticeship program, and we believe it should stay in Virginia, where we can be more responsive than the Office of Apprenticeship ever could be. What this does is include includes two things into the apprenticeship law that on the basis of sexual orientation and on the basis of genetic information, you may not discriminate against your sponsors, may not discriminate against people applying to be apprentices or apprentices already within the program. The only remedy that would be allowed in this situation would be through the apprenticeship law, where the sponsor, if they chose to discriminate, and they would not cease that discrimination based on our attempts to mediate it, would then have their program taken away from them. We would then make sure that those apprentices would be given opportunities to join other sponsors who would be in their industry. It's a requirement of the federal government for us to do this, and we hope you'd be able to see favorably on this bill.
Thank you. Anyone else to speak? Here you go. Delegate Bourne.
Thank you, Madam Chair. A question for the patron.
Yes, sir, Delegate Bourne. Yes, sir, Madam
Delegate
Chair.
Scott, I like this bill a lot. I have one question. How did you land on 40 years old as the age?
That is the number that the Office of Apprenticeships program has designed for folks to be eligible for. And I believe this program is also in line with the federal program that the Office of Apprenticeship programs are. And one of the things that we wanted to do is make sure that this program aligned with the federal program that's being managed right now. And so we didn't want to lose funding if we didn't do it, and we didn't manage it here in the state of Virginia.
Delegate Ware.
Thank you, Madam Chair. My question is about the lines 21 to 24. I'm not sure I can parse that, and I wonder if either the patron or Mr. Field could just tell me what that means in plain English.
Are you talking about the sole remedy language?
I'm talking about the occupancy of such position, B1.
Oh, okay. Yeah, from this language is the language that protects our shipbuilders and other defense-sensitive industries. So if they have to be in that position because they are precluded, we need American citizens to do those positions only. Does that make sense? Then the company would not be liable for that. So it says the occupancy of such position or access to the premises in or upon which any part of the duties of such position is performed is subject to any requirement imposed in the interest of the national security of the United States. So what that does is say, I guess the short version is, we can discriminate in this position if it's for national origin only. Does that make sense?
That does indeed. Thank you.
Okay.
Thank you.
Anyone else in support of the bill? Oh, Delegate Ware. I didn't mean to ask you in support.
Move to report. Madam
We have
Chair,
another question. Yes, Delegate Wilt.
question for the patron.
Yes, sir. Yes, Madam Chair.
Yeah, Madam Chair. That B1, that carve out that Delegate Ware asked you about, I guess I'm failing to understand what allows the same discrimination that you're trying to avoid up here. I mean, what on a government job? What gives the government the right to discriminate based on race?
No, not on race. Only national origin.
Huh?
Only national origin.
Madam Chair?
Yes, Delegate Wilt.
Yeah. Well, I think I would understand why that is. Okay, thank you.
Okay. I saw one light, it went out, so anyone else in support of the bill? Anyone in opposition to the bill? What? Second. The electronic voting machine, you can register your vote.
Thank you, Madam Chair.
The clerk will close the roll. The measure passes 19-1. Thank you so much, Delegate. Yeah. Who was it?
Madam Chair. Madam Chair.
Yes.
Okay.
Okay, all right, thank you. Delegate Helmer.
Good afternoon, Madam Chair, members of the committee. House Bill 1297 leverages the authority provided in the Constitution of Virginia, Article 9, Section 1, which grants the General Assembly the ability to increase the number of commissioners on the SCC to 5 commissioners. As you may know, the SEC was established in 1902 and was initially charged only with regulating state railroads and telephone and telegraph companies and with registering corporations in Virginia. At that time, there were only 1.8 million people in Virginia, and 81% of the population was rural. In its first year, the Commission only approved 482 charters. Since the 1971 Constitution was adopted, the workload of the Commission has grown immensely. And it currently conducts regulatory oversight of 366 public service corporations. The SEC has grown from an initial staff of just 4 at 1902 to 640 today, yet the number of commissioners remains exactly the same. Our neighboring states, with the exception of West Virginia, with a quarter of the population of Virginia, have 5 or 7 or larger number of commissioners. We and the SEC would benefit from a greater diversity of backgrounds, area of expertise, and regional representation in this powerful commission. Additional commissioners would allow for streamlined operations, hearing additional cases, more thorough oversight, and robust judicial debate on regulatory issues affecting the entire Commonwealth. As new technologies have become available, cars, aviation, and other things, the SEC's jurisdiction has been significantly expanded to regulate them, but we haven't added additional commissioners to facilitate that. We've also increased the caseload that's running through the SEC. In 2010, it was about 1,000 cases they were hearing. Since 2015, it's been closer to 1,100, a 10% increase. Currently, the Office of the Commission processes 2,000 utility-related cases per year, and we have an incredible opportunity to support commerce in the Commonwealth of Virginia by increasing the commission from 3 to 5 commissioners. Now, I'm sure no 3-commissioner panel will be excited or ask for 2 more commissioners, but the democratic process is best served by multiplicity of voices and expertise on the commission. If it pleases the chairwoman, I would like to turn it over to Dr. Joel Eisen.
I have some questions for the, Madam Chairwoman, I have some questions for the patron.
Absolutely.
All right, Delegate Kilgore.
So did the State Corporation Commission bring you this bill?
Madam Chair, I would answer the delegate that the State Corporation Commission did not bring me this bill.
Second question, Madam Chair.
Yes.
If I could, I've just got a bunch of questions. If I could just, would I ask the gentleman, are you aware of the study that was done maybe 10 years ago, stating that we looked at whether to expand the State Corporation Commission?
Madam Chair, I would answer the delegate that while I was not aware of the specific study from 10 years ago, I am aware of the specific load and need now and the lack of diversity in the commission to...
Can you define diversity?
There are a number of ways in which the commission could be benefited by additional diversity, diversity of regional representation, diversity of racial and other background, and diversity of experience in terms of the vastness of what the SEC oversees.
Further, Chair. Yeah, further,
Yes.
yeah, a few more questions. Could the gentleman tell us who's paying for this? Who's going to be paying for the salaries, the new offices that come along with having 2 more commissioners?
Madam Chair, I would answer the delegate that we have submitted a budgetary amendment to help make sure that we have the infrastructure in place and are able to make sure that our SEC is able to address the complex economy of the Commonwealth of Virginia and make sure we continue to lead.
I'm asking who pays for it?
Madam Chair, I would answer the delegate that, like all services provided by the Commonwealth of Virginia, oversight is paid for by the people of Virginia through the hard work that we do.
Another question.
Yeah, would that be the ratepayers of Virginia, the folks who go in front of the commission? Would that be the regular taxpayers? I'm just trying to figure out who's paying for it.
Madam Chair, I would answer the delegate that I will defer to appropriations on exactly in which way it is funded.
So I guess my question is, so you bring this bill, nobody from the State Corporation Committee has asked for it. Has some outside group asked you to put this bill in?
Madam Chair, I would answer the delegate that as a representative of my district in the Commonwealth of Virginia and business person myself, I think that looking at comparable jurisdictions and seeing that they are served in a very different way that we are, I think Virginia should continue to lead, and that's why I brought this bill forward.
Thank you. Delegate O'Quinn.
Thank you, Madam Chairman. I have a question for the patron.
Yes.
All right.
You may
Delegate
proceed.
Helmer. Thank you, Madam Chairman. So trust me when I tell you that anyone from Southwest Virginia is very sensitive to the whole idea of representation by region. So I appreciate that very much, trust me. However, in reading your bill, I mean, I don't see how you guarantee that. I may not be a Rhodes Scholar, but I can do simple math. And I realize that we are vastly outnumbered here. So near as I can tell, we're talking about putting 2 Northern Virginians on the State Corporation Commission. So I'm curious how that makes the State Corporation Commission more diverse regionally.
Madam Chair, I would answer the delegate that I appreciate the question and the concern. This bill makes no mention of appointing additional Northern Virginia commissioners, but instead leaves it to the body to determine which commissioners it appoints.
We're going to suspend just for a moment. You hear that noise at that door, and you know how I am. Shut that door. All right. You can continue. Was there another question? Delegate Gutierrez.
Madam Chair, I would just like to say to the patron, thank you very much. I believe that putting this much responsibility on the shoulders of 3 people, no matter how excellent and hardworking they are, I believe it's overburdensome. I think there's always a risk that it could all of a sudden be 2 people. I think it's just too few for a state this size with a population of over 8 million. And thank you for bringing this bill forward.
Delegate Wilt,
Madam Chair, speaking to the measure.
you can continue.
Thank you, Madam Chair. On that same logic, I guess since the founding of our state, we still have we have our numbers of legislators, delegates, and same number of senators. We have same number of governors. Just still have one. And if there's such a workload, perhaps we should look at ourselves of the workload that we shift to the State Corporation Commission. Thank you, Madam Chair.
Delegate Lopez.
Thank you, Madam Chair. Just a comment, a question, actually. Just to remind everyone that the House of Burgesses had far fewer than 100 members. So we have modified over the course of our 400 years, 401. We had actually 23 House of Burgesses. To the patron, when this was founded in 1971, correct? There were 4 staff. And didn't you say that we now have 640 staff?
Madam Chair, I would answer the delegate that that is correct, although my understanding is the original founding of the SEC was in 1902.
I apologize.
With the 4 staff. But yes, the premise still stands, 4 staff to 600.
And how many public service corporations are we currently overseeing?
So today, Madam Chair, I would answer that we are currently overseeing 366 public service corporations.
And that's growing as technology grows, as new industries are developed?
Madam Chair, I would answer the delegate that it continues to grow both in terms of numbers and in terms of the complexity of what we have asked the SEC to do.
Thank you. Thank you, Madam Chair.
Delegate Keem.
Thank you, Madam Chair. I wanted to ask the patron a few questions, and I'm sorry that I didn't read this bill until just now because I've heard that this bill was in the works, but this is the first time I'm having a chance to read and try to really understand this. I'm agnostic as far as whether we should or shouldn't increase the number of people, and I could be persuaded one way or another. But I just want to think this through as far as the logistics of how we do this. So first of all, my understanding, and I'm trying to read the Constitution as we do this. So the Constitution mentions that there will be 3, but it also delegates to the General Assembly the ability for us to expand it up to 5. And so legislatively, we can expand up to 5. Is that correct?
Madam Chair, I'd answer the delegate that that is correct. Section 1 of Article 9.
Okay, and secondly, Madam Chair, if I can continue.
Please continue.
Thank you. Based on the conversation just now about the diversity and such, the only qualification I see that is required by the Constitution is that at least one member shall have the qualifications prescribed for a member of a judge of the court, which means at least one person should be a lawyer or somebody who qualifies to be a judge. Is there any other qualification either in the Constitution or in the statute today that requires any kind of diversity, either background or physical or geographical diversity to your knowledge?
Madam Chair, I would answer the delegate that I do not know of that, but this would be a great question to turn over to Dr. Eisen, who is very familiar with the deeper elements of the code related to this.
Well, Madam Chair, before we turn to the members of the public, I just want to ask the patron a few more things because, like I said, I could be persuaded one way or another, so I'm not coming in with any agenda. I just want to understand how this works and what we're trying to change here. To the extent that we want to have diversity, if that's in fact what we want to have, would it make sense to add some language in here that says among the 5 they shall be divided into whatever way? For example, we have the Commonwealth Transportation Board, which by statute requires geographic diversity, which some of us can argue about whether that's fair or not, but at least there are some precedent we have in the code that requires geographic diversity. Would that be something that you'd be open to if we were to go through the amending process here?
Madam Chair, I would answer the delegate that I would be very open to suggestions on how we enable we put language into this legislation that enables it to attain those goals.
And Madam Chair, I think this might be my final question, or at least a topic within the question, which involves the issue of actually selecting the person or the 2 people. Now, we know that the General Assembly, elects members of the State Corporation Commission as well as members of the judiciary, But in the event that we are not able to, and there is a vacancy that exists while we're out of session, my understanding is that the general practice is the governor has the ability to appoint as a recess up until the time that we come back into session or special session. In that instance, would it be a likelihood that a governor can appoint up to 2 vacant members at the same time? Is that a possibility? One governor, the same governor appointing 2 members at the same time?
Madam Chair, may I ask the delegate for a slight clarification?
Yeah, I'm sorry. Since we're creating a vacancy at the same time, if we went from 3 to 5, and we're supposed to fill this through the General Assembly, but just for whatever reason, we are unable to find the right people at the right time, and we go out of session. And at that point, if the governor were to say, hey, you all created 2 more spots, there's 2 vacancies, since the General Assembly is out of session, I'm going to go ahead and name 2 people to this job for an interim time. Is that a possibility, or would your statute, would your language not allow that to happen?
Madam Chair, I'd answer the delegate that I would have to defer to legislative services on that one. I don't know the answer. As I read it,
let me just make one final point on this. And my concern comes down to this. I'm open to the idea of expanding it. What I don't want is an executive branch manager, our governor, having the ability to appoint 1 or 2 commissioners of his or her choosing without going through us, because the 100 of us here, the 40 of us on the other body, we have a better sense of who would be a right fit for diversity qualifications and such, as opposed to one governor, whoever he or she may be from whichever political party. And we've seen this already in different contexts, where the General Assembly's person that we'd like to choose versus a governor's person that he or she would like to choose may be in conflict. Now, I understand there's a difference between temporary versus permanent, but the fact that we may allow that to happen is a little bit of a concern to me, so I'd like to fix that. And at the same time, the relating to that is the issue of staggering versus non-staggering. If you stagger it, in a way, you can try to make sure that no one governor gets to appoint a lot of members. But if you don't stagger it, the vacancy may come up at the same time, which allows the governor to try and stack the State Corporation Commission. So I'm really concerned about making sure we maintain the balance of power here and the independence of the SEC. Thank you, Madam Chair.
Okay, we've got 2 more questions right now. Delegate Lindsay.
Madam Chair, I move to report and refer to appropriations. I see there's a fiscal impact of $1.3 million for 6 successive years.
Good God.
Non-general fund.
Is there a second that we support the bill and send it on? Oh, no. Oh, I'm sorry.
Would you?
Also, Delegate Kilgore, you had a question?
All I was going to make a comment was, I mean, right now, the State Corporation Commission has 2 women and 1 man who is over there as commissioners. That's very diverse. And I'm just, I don't know what diversity we're looking at, unless it's some diversity I'm not seeing. But I think there's more to this bill than is being talked about here, but I'll leave it at that.
Okay, I'm going to ask for anyone, member of the public, who would like to speak in support of the bill.
Madam Chair and members of the committee, my name is Joel Eisen. I'm an energy law professor at the University of Richmond. For over 2 decades, I've done research and writing on utility regulation. I also belong to a group of law professors and utility regulators from over 20 states that studies the functions of public utility commissions. And finally, I also teach administrative law, which deals with regulatory agencies like the Corporation Commission. Let me jump right in. I have 2 principal arguments in support of the bill, but what I'd like to do first is actually address the concern that's been raised about diversity, because I think that's extraordinarily important. Madam Chair, Delegate O'Quinn, Delegate Kilgore, you've all raised the idea of diversity. It's handled differently in our neighboring jurisdictions. Some of our jurisdictions do not specify anything in their code about what diversity means. Maryland has a provision in its code that may be very important here, and let me read it word for word. It says the commission shall be broadly representative of the geographic and demographic diversity of the state and the public, and composed of individuals with diverse training and experience. And I think that second part is very important. In Virginia, we already have a commissioner who came from a legislative background and a commissioner who came from state government. So one could imagine that diversity might mean someone coming from an industry perspective. We could also imagine more demographic and geographic diversity on the commission, as has been mentioned. Okay, so I'll go back to my other argument, which is that it's a bedrock principle of administrative law that an agency like the SEC is accountable by being a multi-member commission. That structure ensures that no single head of an agency can wield excess power. So with 5 members, there's more opportunities for commissioners to have a more robust debate with greater number of views on any single issue. In conclusion, I'm in support of this bill. I think it's consistent with practice in our neighboring states and would be a favorable development for Virginia. I'm happy to answer any questions that may arise during the discussion. Thank you.
Thank you.
Hello, Madam Chair, members of the committee. My name is Kaylin, and I'm with Virginia League of Conservation Voters, and I just wanted to let you all know that we are in support of this bill.
Thank you. Anyone in the public would like to speak in opposition to the bill?
May it please, Madam Chairman and members of the committee, my name is Judy Yogman. I'm the current chairman of the State Corporation Commission, and I'm here not so much to speak against the bill as to just let you know how we operate currently and to answer any questions that you have and to address any concerns that you may have about what's going on at the commission. We're all very dedicated to our positions, and we work very hard to enact the laws that you have, the General Assembly has enacted. And so there are just a few things that I'd like to say about what we do. First, just a little bit about myself. As I said, I am the current chairman of the State Corporation Commission. I'm currently the second vice president of the National Organization of State Commissioners. I have served just recently, the past 2 years, I was the chair of the Electricity Committee for this national association. I was currently at the Attorney General's office, where I basically served in the role of consumer counsel for 7 years and was elected unanimously by this body to serve as Attorney General for 1 year. Now, the bulk of my career has been either working for the Commission, serving as consumer counsel in cases before the Commission, or being a commissioner. And I thank this body for the opportunities that I've had to be a commissioner at the State Corporation Commission. To talk about, to address some of the questions that have been raised with respect to payments, the payments are made, they are made by the industry that we regulate, who in turn charge the customers of Virginia, be on the banking side, through the charges to the banks, to electricity customers, etc. With respect to the workload, we have 5 hearing examiners who assist with hearing the cases that come before the Commission, and I am not aware of any complaints with respect to our getting the work done. If there are some, I certainly want to hear about them, and we will address that. With respect to other states, our commission is indeed different from almost any other commission in the country. Number one, because we do more than electricity. I know, I think Dr. Eisen teaches a course on electricity regulation and administrative law. Our commission does more than, as you know, utility regulation. We regulate insurance, banking, securities, and we're the home of the state of the what is typically done in most states through the Secretary of the State. All corporate entity filings are made at the commission. What a lot of people don't realize is that with an agency that's this large, we have strong directors or heads of each of the separate bureaus. You've seen Commissioner Joe Face. He is in charge of the banking division. Of course, he reports up through us, and we are the administrative head of the whole commission. There's also a director for the securities division, a couple of directors in the utility area, and so on and so forth. But the bulk of what the three commissioners do, most people are surprised that over 50% of what we do is administrative. We are basically three co-agency heads. And we work very hard. We make all those decisions together, and we work very hard to get unanimity on those matters. And I'm talking about things like, procurement, information technology, personnel decisions. And going from 3 to 5, I think will make that exponentially more difficult. Another area that is going to be added, if legislation is passed this session, there are currently bills from, my understanding is it's the governor's bill, to establish a state-based healthcare exchange. And we have been working with the governor's office to identify needed elements. If given this job, we're committed to doing it successfully, and this will indeed add to our administrative duties. And again, as I'm saying, if you're a three-headed agency, that takes some doing to agree on all those administrative matters, and going to 5 will not necessarily make that any easier. One thing I might add, if you do decide to go to a 5-member model, what's typical for a lot of these states, Maryland, and I believe Maryland was recently mentioned, and New Jersey. In those states, the governor appoints the chair of the committee, the chair of the commission, and they basically are the agency head, and the other commissioners just basically show up and cast votes. So that's really how it's done in a lot of these other states. And in some of these other states, the governor picks, basically they're treated as cabinet heads, but the appointments are the governor appoints them, picks them, and they're affirmed by the Senate. So, like I said, we're not here to support nor oppose the bill, but I wanted to give you some background and let you know that we're here to answer any questions that you may have.
Thank you so much. We appreciate it. And Delegate Lopez.
Thank you, Madam Chair. Just a quick question for Judge Yagman. So, yeah, you said that, first off, you definitely have a huge area of responsibility and coverage. It's like you just said utilities, insurance, banking, securities, corporate filings. Now, if I remember what the delegate stated, it's North Carolina has 7 commissioners, Maryland's got 5, Pennsylvania's got 5, South Carolina's got 7, Delaware's got 5, Georgia's got 5, and then West Virginia, which is 1/4 of our population, has 3, just like us. So, and you also said you were the former president of the National Association of...
I'm the second vice president currently.
Okay.
And I was chair of the Electricity Committee for a national association.
Okay. Do you think that these other commissions that have larger memberships work well?
I'm not going to tell you that they don't work well. I don't think they work any better than we do.
I see. And so the idea being that with such a huge swath of, I mean, let's just be honest, the SEC in Virginia is the great Oz behind the curtain. Let's be clear that I think on this side of the aisle, you're going to see a lot of interest in maybe expanding some of this responsibility and having a more diversity of most regional as well as opinion.
Well, and with respect to that, if I may,
sure, yeah, let's hear it.
You talk about diversity of opinion and thought. I think the most important thing, when you're talking about, we work very, very hard to follow the laws that are enacted by this legislature, and if the opinions or if the policy of this legislature is changing, that's fine. We will follow the laws before this that are enacted by this body. Since I've been on the commission a little, I guess 12, 13 years now. We've had many, many appeals because, let's say in the utility area, which I gather from the questions that have come and whatnot, that's where a lot of this is coming from, is on the electric side. Mm-hmm. We've had lots of statutory change over the last 10 years. And because of all of that statutory change, no one in their cases before us, few agree on what anything means, as you might suspect. So we've had many appeals to the Virginia Supreme Court. As you know, you have an appeal of right. And one of the things that I find interesting is that we've been appealed by everybody. Sometimes the utilities don't like us. Sometimes the environmentalists advocates don't like us. Sometimes the consumer councils don't like us. So everybody, it's not like we've had people appealing our decisions from one corner or another. And I am very proud to say that we have never totally lost any appeal when they've been appealed to the Virginia Supreme Court, and we have lost on a couple of issues. So, and I think this is worth pointing out as well. Everybody's going to have a background when they come to the commission, and when it comes to when you have these jobs, you really have to set those aside and look at the law and follow the policy of the Commonwealth. So I think it's fine. Diversity of opinion is fine. We welcome that in our courtroom. And I would hope that if you asked anyone, they would say that no one, and I know of commissions where there are large commissions and they shut down opposition voices in their cases.
Right.
That has never been our policy at the commission. And so, it'll be the will of this body to do what they do. And I'm, like I said, I'm not here to speak against it, but I am here to say that I think we have worked very hard to hear everyone, listen to everyone, and to follow the statutes that have been enacted. If these statutes change, we'll follow the changed statutes.
One follow-up, Madam Chair.
Let me just mention that we've got quite a few people that want to ask a question, so I'm allow everyone to ask one question, and if you still have a question that has not been answered, we'll come back.
Thank you, ma'am.
Okay? Delegate Guzman.
Thank you, Madam Chair.
This
Judge,
for me?
yeah, it's
Yes,
for
mhm.
you. I don't think that any member on this committee doubts your experience and your professionalism. But I'm just going to be honest with you. I also work as a full-time job as a public servant, and you are the first person that I have seen that we're trying to offer you resources, and you are saying no. I don't need them.
I'm not saying no.
So-
I'm saying we're doing the job is all I'm saying. I'm not saying no, but I feel strongly the need to stand here and say that I think we are doing the job.
No. Now, I also heard you talking about complaints, but then at the same time, I also hear you talking about appeals. So
Appeals.
my question to you is, are there complaints that they turn into appeals? Because you overstate that you have 0 complaints and everybody's extremely satisfied with the job of the SEC. And I can tell you that I have constituents when they even have a hard time with the process, when they have to open a business, when they have to follow up with their insurances. So when I hear you say, and that doesn't even talk about the environmentalists that you said that are unhappy with you, I'm talking about the other branch, about the process. And all the time we hear that they are challenged, the workers behind the scenes. So I just wanted to understand if you could share with us complaints that you receive, because I am sorry, but I don't think that you have 0 complaints, and you have
I didn't
extremely
say that. I
satisfied
didn't say that there are 0
customers.
complaints, but I said I have not heard from anyone in the General Assembly that they had complaints. There are complaints, if there are issues that you're concerned about, we certainly want to address those. That being said, too, our division directors, they work very, very hard to resolve complaints as well. And I think we have a pretty good record in that regard. And if you have constituents who have concerns, that's something I really want to know about and help.
Delegate O'Quinn.
Thank you, Madam Chairman. I have a question for Judge Yogman. So I think all of us probably at some juncture have worked with a lot of the attorneys and experts that you have over at the State Corporation Commission, and every time I'm always amazed at the number of people that are there. I mean, it's a good-sized staff. There's a lot of work that gets done there by very bright people. That being said, I can only imagine that the State Corporation Commission has probably had to grow over the years with the staff attorneys and the professionals there who do the nuts and bolts, the hard work of digging into all this. And so I guess my question would be, do you all have the ability, and have you in the past, been able to expand or contract the size of the State Corporation Commission staff overall based on the increase or decrease of the workload, for business registrations or things like that. I mean, just a simple increase in the population of Virginia doesn't automatically mean you're going to get a higher workload. But if 300 new businesses register, then certainly you would. So do you have you had instances where that's happened, and do you have that ability?
I don't have that data right in front of me, but I can tell you currently we have a budget of over $100 million and 630 employees, and the number of employees has grown over time. That being said, we look for opportunities to consolidate. One of the areas where we are definitely able to have economies of scale is, on our administrative side, because, we're doing the same function for the several areas, for banking, securities, utilities, whatnot. You need personnel expertise for all of that. You need, procurement expertise for all of that. So we're able to consolidate that. But that being said, you're exactly right. As the Commonwealth has grown, the size and the budget of commission employees has grown, and the responsibilities of each of the division directors and the actually they're called commissioners because they have large responsibilities. Like Joe Face is the commissioner of banking, and Scott White is the commissioner of insurance. I know you'll be seeing him a lot before you on these exchange bills.
Thank you. Delegate Weber.
Just real quick. So as we discuss policy in the Commonwealth, discuss energy policy, insurance policy, et cetera, if over the course of the years the state corporation has ruled one way, if we want to change that ruling, oftentimes the best way to do it, particularly when it comes to a judge, is just to change the policy, correct?
Correct. Yes, sir.
Thank you.
Delegate Bowen.
And I would also add, we come up for reappointment every 2 years.
Thank you,
if
Madam
you don't
Chair.
think there's enough diversity.
I would have a motion that we move the pending question.
A question has been called for. All in favor?
Aye.
Any opposed? We'll open the rolls. We will vote. Yes, to go to appropriations. Did I vote? The clerk will close the roll. The measure passes 10-9. Thank you so much.
Thank you to the chair. Thank you to the committee.
Next, Delegate Wampler.
She'll never see the light of day.
Thank you, Madam Chair, members of the committee. I have House Bill 1155. Thank you for passing that bill by for the day at the last committee meeting. I'd also like to say thank you to the State Corporation Commission for working with me on this bill. The bill's intent was to incentivize new companies in Virginia, those being under 2 years in existence, to cut their organizational fees owed to the SEC in half. This bill was designed to incentivize new business growth in Virginia. However, what I could not work out with the commission to an appropriate satisfaction was the fiscal impact that it would have. It would cost them many millions of dollars each year in fees that are owed to the commission, and therefore, I would ask the committee if it's be your pleasure to lay this bill on the table.
So moved.
So moved.
Okay, second. All right, you can register your vote on the electronic voting machine. Gotta wait a moment. Delegate Willett, you are next.
Thank you, Madam Chairman, members of the committee.
Close the roll. The motion passes. The bill is laid on the table 15-1. Delegate Willett.
Thank you, Madam Chair. I actually have an amendment to the bill. I want to make sure you have that.
Second.
Madam Chair.
This is just, everyone has that. It's just amending one line. This is line 47. And after the words apply to, inserting any bank, comma, savings institution, comma, or credit union, comma, or to.
Is there a motion that we adopt the amendment? Any second? All in favor?
Aye.
Motion passes. Delegate Willett, you may proceed.
Madam Chairman, I apologize. I'd missed a second amendment. I had an older version. So if I can, do the members have it? Yeah, I'll read this to you. This is actually also on line 52, after the word if. It'll be striking the remainder of the line through the word services. That goes to line 53, and then inserting, and I'll read this, if it offers to provide or provides debt settlement services solely in connection with offering to provide or providing debt management plans.
Move that amendment.
Is there a second? All in favor?
Aye.
Any opposed? You may proceed, Delegate.
Thank you, Madam Chair. This bill would authorize the State Corporation Commission's Bureau of Financial Institutions, give them the licensing and regulatory authority over companies offering debt settlement services. In case you're not familiar with that, debt settlement services are where companies negotiate essentially loan or debt forgiveness on behalf of consumers. Currently, there are the companies charge, or the fees that are charged by these companies are unregulated in the Commonwealth. This bill does not impede legitimate businesses from offering these services. This is really aimed at regulating what could be called bad actors in the industry and making sure that consumers are protected. The bill would cap the fee that these companies can charge. The version you have in front of you sets that cap at 10% of the amount that the company saves on behalf of a customer. We've been working on this bill for some time, and I'll talk more about that. But since this does have to go to appropriations for approval, I would indulge this committee to let you know that we are still working on that exact percentage and how that's calculated. But we do have the support of industry working towards that solution, and this, to speak to that, this reflects actually a multi-year effort in terms of working with the SEC, the Attorney General's office, and then industry as well.
Thank you. Any questions from members of the committee? Do you have anyone in the public to speak in support of the bill?
Madam Chair, Dave Albo, representing the Fair Credit Council, and the Fair Credit Council is an association of debt settlement service providers. The cap is still, we're still not in agreement, but I can say that Delegate Willett and the AG's office have been very good to work with, and we've all promised to keep working on it. And since this has to go to appropriations for the reasons that the chair said earlier, that we would ask you all to send the bill to appropriations, and we'll keep on working.
Madam Chair, members of the committee, my name is James Scott, Assistant Attorney General, Consumer Protection. The Attorney General supports this bill for the reasons already stated by Delegate Willett. I would say also that we've worked very closely with the SEC, and we're very happy with the bill as it's drafted now, and would urge you to support it. Thank you.
Jay Spear with the Virginia Poverty Law Center. We see a lot of abuse from these companies. I'm sure none of the ones represented by Delegate Albo. But, you know, where I commonly see it is if somebody gets caught up in a bad payday loan and they can't get out of it, then they go to a debt settlement company and they get ripped off again. So it's a real problem. It really needs to be regulated. So I urge you to support it.
Madam Chairman, my name is Mike Croxon. I'm the President and CEO of Consumer Education Services, 501c3 credit counseling agency that services customers here and clients here in Virginia. But I'm here today representing the National Foundation for Credit Counseling, of which I'm a director, as well as the Financial Counseling Association of America, of which I'm a trustee. Those two entities represent virtually every nonprofit credit counseling agency in this country. We see many consumers abused in this space, but we also see the value of debt settlement programs for the appropriate consumer and urge that you press this bill forward because this will protect consumers.
Anyone would like to speak in opposition to the bill? Delegate, would you like to wrap up the bill?
Just by making one other note, to give the SEC some time to establish this new regulatory process, there's an effective date in the bill of July 2021. Thank you, Madam Chair.
Is it?
Okay.
It's been properly moved and seconded that we report and refer to appropriations. You can register your vote on the electronic voting machine. We may have worn out our voting machine. Okay, here we are. The clerk will close the roll. The measure passes 16-1.
Thank you, Madam Chair.
Thank you. We're down to the home stretch.
I've got House Bill 1339. Is there a amendment on that? No? Yeah, I thought so. There's a substitute. I move we adopt the substitute. All right. All those in favor? No. I think we moved to adopt. There was a substitute that needs to be adopted, Mr. Chairman.
All in favor? Delegate Kilgore.
Mr. Chairman, ladies and gentlemen of the committee, what this bill does, it deals with crowdfunding, and in 2017 we passed crowdfunding that expires on July 1st, 2020. So we need to make sure that we reauthorize that. But what the current law did not allow at the time was subordinated debt to qualify for crowdfunding, and it also made it difficult to use the internet for crowdfunding campaigns. So what this bill does, it removes the sunset clause. It allows subordinated debt to qualify for crowdfunding as long as it's in compliance to existing SEC rules. And it adopts a rule that was recommended by the State Corporation Commission staff in their report to legislators in 2018 and 2019, making it easier to use the internet for crowdfunding for Virginia issuers. So what this bill does, it's going to make it easier for us to use crowdfunding in Virginia and for some of our businesses to do that. So that's basically what the bill does, and it also reauthorizes the legislation, Mr. Chairman.
Thank you, Delegate Kilgore. Any questions for the patron from the committee members?
Yeah. Is this a commission bill?
Did someone from the SEC call you?
Any members of the public want to speak in
Is
favor
this a
of the bill?
good bill?
All right, everybody.
Chair, members of the committee, I'm Ron Thomas, Director of the State Corporation Commission's Division of Securities and Retail Franchising. The only comment I have with respect to the bill regarding subordinated debt, the staff of the division did a study this summer, which was subsequent to the annual report that's filed on the state of crowdfunding in Virginia, and determined that the current prohibition that's contained in the Commission's regulations, we're going to recommend that that prohibition be eliminated, which will allow any form of security to be offered as part of crowdfunding. So in order to keep with the policy of this body to allow flexibility where the commission can react from a rule-making standpoint for changes, I would ask that part, that in the substitute, that they may be stricken.
Okay. I'm fine with that. If
Are you amenable to that, Delegate Kilgore?
I'm fine with that, Mr. Chairman.
Mr. Chair, I would make that motion.
Yeah.
All in favor?
Thank you. Sorry about that.
Anybody opposed? All right.
All right, that's fine. And I appreciate the State Corporation Commission.
Yeah, I got it.
I'm told council has what we need.
Okay.
Second.
I second.
Motion has been made properly to move to report. Clerk will please open the roll. Members, record your votes on the automatic voting machine. Hold it open. HB 1339 reports 14 to 0. Chairman Ward.
Thank you, Mr. Chair, members of the committee. House Bill 813 is simply a bill that will provide compensation to members of the credit union's board of directors and members of the credit supervisory committees, including any kind of reimbursement for business-related travel, and it shall be determined by a written policy that's been approved by the board of directors. It removes that prohibition of compensating members to the credit union board of directors, and it cannot go beyond the $6,000. That is all the bill says. You have members that are doing business for a credit union, reimbursements and the like, no more than $6,000, but they can be compensated.
Delegate Ward, did you have a substitute?
Oh, I'm sorry, got to move the substitute.
All in favor? Aye. Substitute's on its way. Delegate Ward, is what you were describing to us consistent with the substitute?
Yes, it is.
Any questions for the delegate from the members of the panel?
Sorry.
Delegate Keem?
Yeah, thank you, Mr. Chair. Just a quick question, and either the patron or somebody else who might want to weigh in. I just want to understand the scope of this because I know that we have federally chartered and state chartered credit unions in our state. I just want to understand which code section this is because I'm not as familiar with the nuances of how boards are currently not compensated in either of those categories.
First, we want to thank Chairman Ward for carrying this bill. This would apply to state chartered credit unions only. And
Could you introduce yourself? No one up here knows who you are.
I beg your pardon. Yeah. Whit Clement, on behalf of the Virginia Credit Union League. I beg your pardon, Mr. Chairman and Delegate Keem and members of the committee. There are only 20-some state chartered credit unions in Virginia. Predominantly, they are federally chartered, so it would only apply to the state chartered.
Thank you, Mr. Chairman.
Any other questions for the patron? Any members of the public want to be heard in favor of the bill?
Mr. Chairman, members of the committee, Matt Brennan with the Virginia Bankers Association. I rise today just to simply remind the committee, especially our new members, that to Delegate Keem's point, we usually stand up and object when legislation expands credit union authority beyond parity for state chartered credit unions versus what's available to federally chartered credit unions. And that's what this bill does, since under federal law, federally chartered credit unions are prohibited from compensating the directors. That being said, we appreciate the willingness of the chair and the proponents to adopt the amendment limiting the level of compensation. While not a de minimis amount, setting a limit is important, and we therefore do not object to this bill moving forward. Thank you.
History is made with me in the chair, I'll point out. Anybody speaking against this bill? Motion is to report. It's properly seconded. Clerk will please open the rolls. Members will vote on the electronic voting board.
Do I have to go vote?
The clerk will close the roll.
All done?
The bill reports 15-0.
Thank you. And Mr. Chair, may I just thank everyone who has sat here all this time, and I want to do a special thank you to those people who have been keeping the door closed. It has been great.
Ladies and gentlemen, this committee is adjourned. There are only 2 more subcommittees to go.
That's it.